Hey everybody, welcome. Greetings from beautiful Scottsdale, Arizona. You can tell we're drinking, and this is going to be kind of a funny live stream because we're doing something different tonight. Very different, very different. I'm here with our client and my buddy Gene Morris.
What's up?
And every month I do a live stream for Rebel Capitalist Pro, which is George Gammon's group. And we are all set up to do it here. Hey, Gene, say hello.
Hey, how's everybody going?
And hold up your beer and give them a toast. Did you already finish that?
Exactly.
Wow, alcoholic, man.
I don't drink.
You don't drink any more or any less, right? Anyway, so we're doing the live stream, and I thought, why not let my audience in on this? So you're coming in on the live stream here as well. We're doing a double mirrored live stream. This is maybe a world record for the first time ever. So enjoy it, folks. We're going to sit in and so
answer some questions.
We might move the camera around, by the way, during this interview, just to, I don't know. We're just going very,
it's
very rebel guerrilla style tonight. So yeah. So
I still have to go live too.
Enjoy. So. Oh well, Gene, hurry up! You gotta go live.
All right.
He's going live now. See, there he is. Yeah.
Okay,
we are now live over here. Too.
We are live now. We are live now.
This is
funny. Sincerely apologize for being tardy, but that's how it goes sometimes when you're working on location, remote.
And double live.
So it's Monday. It's November 8th. It's 8:00 p.m. Eastern Standard Time. This is it's like the second Monday, right? Second Monday of the month of November. And we're here in Scottsdale, Arizona with our good buddy Jason Hartman, and we're going to talk some real estate. And we have a whole bunch of questions from the pro members to answer. For the folks that are listening from the Rebel Capitalist Pro side, meet the folks on the Jason Hartman side over here. We got two live streams going on.
This is the weirdest thing ever. We
Yeah,
didn't even know we could do this, but we're doing
technology, right?
Yeah.
So we're having a lot of fun here. Where George and Jason, they had their the collective event this weekend. So Jason's in town, and
drinking beer.
And I came down to the hotel so we can do this live stream. And looks like Jason's already blowing up over there. But anyway, guys, thanks for hanging out with us in the live stream on the chat and so forth. So we're gonna get some questions out of the way, and if you have anything,
let us know where you're located, where you're watching from.
There you go. That's another thing.
We're saying that to both groups.
Both groups, yeah. For the folks that are hanging out. Let's see here, and I have to admit that I'm bouncing between tabs here on my Chromebook or on my laptop. So
he doesn't have a Chromebook.
Jumping around
he
here.
hates Google, just like I do.
Yeah.
Okay, I'm going up here with it. We're going to move it up here. Yeah.
Boy. Yeah.
Okay.
Anyway, guys, thanks for hanging out with us. Let's go ahead and get these questions knocked out.
All right.
Put my serious face on. Okay, so this one here is you're probably gonna have to punt on this one, Jason. But first question is from another Jason. He asks, "Hey, Jason, what are your thoughts on investing in Dubai real estate? Do you have any experience or advice on how to go about investing in Dubai real estate?"
I think Dubai is a very speculative, cyclical market. I took my mastermind group to Dubai a few years ago. It's really an incredible city, possibly behind Shanghai, or maybe not. The most amazing man-made environment in the world would be Dubai. But I don't think any real estate deal is going to make sense. One of my core principles is it must make sense the day you buy it or you don't buy it. And, we like these boring linear markets, nothing sexy, not Dubai. So I'm going to say probably not.
Now, what's the big building there? The Khalifa?
The Burj Khalifa.
Burj Khalifa.
And we went up in that. Yeah,
okay.
It's amazing. Yeah.
Yeah. I remember a while back, George and Chris McIntosh, they were talking about investing because it's relatively cheap. And I do believe Chris is actually stopping in Dubai on his way to Mexico, because he's fleeing New Zealand right now. So he's getting his ducks in a row, and he's working on the escape from New Zealand.
That is so sad that you'd have to escape from New Zealand. That is a beautiful, beautiful country. Yeah. I always say, when I went there years ago, I actually did the opening session for the National Speakers Association of New Zealand.
No kidding.
This was about 20 years ago or something like that. Or no, it was post 9/11, so I think it was. So it wasn't quite that long ago. But yeah, it's a beautiful place, and they have just become a prison camp.
Just tragic, isn't
As
it?
has Australia. It's absolutely awful.
Yeah.
And those who are for liberty and human freedom and human rights, this just cannot be tolerated. I mean, Australia they're keeping people in the country. It's like the Berlin Wall.
Yeah.
It's unbelievable.
It's a bit like being imprisoned in the Jungle Book ride at Disneyland.
It's just
You know,
nuts. It's nuts.
I always told people, I'd always tell people like, where are you going to escape to someday when you grow up? And it was always New Zealand, just because it was so beautiful. But after the experiences that we get to experience in 2021, yeah, that's changed.
Hey, I'm hearing over here, I'm looking at my comments, Gene, says the Jason side is cooler than the rebel capitalist side. Hey, I'm into it. Thank you.
Man, you know what?
I hope the sound is okay, by the way.
I doubt it.
Here we're plugged into the microphone. Here we're just
Yeah.
on the computer. So I hope the sound is all right. Yeah.
All right, JB. Sorry about that. JB, a good person to ask would be Chris on this Thursday. He's actually heading to Dubai, and part of it may be related to real estate. So definitely submit this question to Chris this Thursday. Okay, so this one's from Wynn. He says, "Hey Jason, what are your thoughts on Zillow dumping their properties on the market at below what they originally paid for? Are we heading for a real estate crash in Phoenix, Dallas, Atlanta? Appreciate your insights, Dwayne."
Well,
Sorry.
let me tell you, when we're talking about Zillow, I'm glad, Gene, that we have truth serum here.
Yeah, I know. I'm out.
Cerveza. Because Zillow really just screwed the pooch.
Yeah.
I mean, that's just amazing what they have done. For years, so many people have relied on Zestimates.
Right. We all do.
Thinking that these estimates are accurate, but they're not even accurate for Zillow.
Phony baloney, guys.
They've just massively overpaid for properties. This is another example of so many of distortions
in the market.
When you have overfunded tech companies, and there's an arrogance with tech. There is a massive arrogance that they think they know how to do it better, that they think just because they have, software and an algorithm, I bet if Zillow just had a realtor, and there's a lot of bad realtors, okay? There's a lot of bad ones out there. If Zillow just had a bunch of realtors evaluate those properties, they would have saved $500 million.
Easy.
I mean, it's just a major screw up. And I doubt the CEO of Zillow will survive this. Maybe even today there was news that the CEO resigned.
Yeah.
I don't know. But it's just a complete screw up.
I remember Peter Schiff talking about this like a year ago when they had this model where they were just going to basically scoop up everything and put it
They call them iBuyers.
Yeah, and create an inventory and then turn around and sell them.
Yeah.
And of course, you just can't have all eggs in one basket.
It's a disaster.
Bad idea. Anyway, with respect to the question though, do you think this is going to have any negative impacts on, say, like the overall broad real estate market with what's happening with Zillow here?
Look, if Zillow starts letting these properties go, which they might hold a little bit and try to wait for the market to catch up. We don't know what they're going to do.
Yeah.
They might dole them out kind of slowly, but some think if they dump them quickly, in the markets they're in, which is not every market, and it's, in the overall scheme of things, folks, this is not that much, right? It's a lot to Zillow, but it's a drop in the bucket to the overall real estate market.
That's a good point.
It's not very meaningful.
That's a good point.
At all. It's it's $500 million, right?
Yeah, ain't much in the world of real estate.
No, that's nothing. So it could cause a little bit of extra inventory, but inventory is in such short supply, Gene, that I don't think there's any major impact. But maybe there's a domino effect, and the other iBuyers, as they call them, that's iBuyers like internet buyers, iPhone, I don't know, whatever. Like Open Door and Redfin and several others out there. Maybe they'll get scared and they'll rein in the horns and they'll stop buying, which is okay with me. That's not a real part of the marketplace. The real part of the market is home buyers, owner-occupied home buyers, and investors buying properties for long-term investment.
Right.
That's the real real estate market.
Yeah.
The iBuyers are a distortion, and they're overfunded. And just like in the dot-com bubble over 20 years ago, when these venture capitalists and then the public and the mezzanine financing people and even the angel investors before that, when they overfund these tech companies, they create an undisciplined company. Like it's like a spoiled child.
Right.
I remember 20 years ago, and I lived in Orange County at the time. And Orange County was a big tech hub. It's not Silicon Valley, I agree, but Southern California. They have the Tech Coast Angels, and I pitched an idea to them once. I would visit some of these internet companies, and I knew all kinds of people doing that. There's Ferraris all over the parking lot, beautiful new office furniture. They're having big parties. I'm like, show me your freaking business.
Right.
There's no real business here. These companies are totally dysfunctional. Uber is another great example of a dysfunctional company. Look, real companies sell something at a markup and they add value and they make profit. What a concept.
Yeah.
They are not, real companies do not make money by raising money.
Right.
That's not a business. Imagine that.
Yeah, no kidding.
Anyway, I get more passionate. Give me another beer, I'll get even more passionate.
Yeah, no doubt, man. This is we're getting the real answers here today. So this is okay, great. So I guess that kind of answers that question. Let's move on to the next one here. This is from Permafrost. This is Tom from Texas. Yes. Hey Jason, thanks for all your great content. What advice in sequence of due diligence do you recommend for investing in a second home or possibly Airbnb in San Miguel de? Okay, this is a Mexico question.
Hey, I'm drinking Mexican beer right here.
Here we are.
My favorite.
So anyway, he's looking at procuring maybe a property in San Miguel de Allende, Mexico. I'm not exactly sure where that's at. Cost of living is cheap. Supply chain is very short, which is great. Currency multiplier is excellent. The main questions is what sequence of due diligence for boots on the ground work do we need to do, starting with the realtor? This is Tom from Texas. So yeah, if you were going to buy something in Mexico, like what would your approach be?
Well, I don't know much about the Mexican real estate market, and I don't know. But the due diligence would be the obvious stuff you do anywhere in the world. You have a home inspection. In Mexico, they have a more opaque closing process and title process, which is bad.
I'm sure.
In the U.S., it's much more transparent. I would really check into that. If they have surveys, I would be sure to get title insurance, things like that. And they offer title insurance. The big American title companies are down there doing business. So that kind of stuff. But if it's an Airbnb property, I do have friends that do Airbnbs in like Playa del Carmen and Tulum, and I think they do pretty well with them most of the time.
Tulum's getting some heat out there right now.
Yeah,
a lot of cartel stuff going on.
Oh, in Tulum?
Oh yeah,
really?
Yeah.
Wow. Okay, I didn't know that.
Yeah, that's
a high-end area. Yeah.
Yeah, I know. I've been down there.
It's terrible.
It's a cool place, but be careful. So I guess I imagine there's a service already. Somebody smart's probably already established some sort of gringo service down there and kind of help you figure out how to buy property down there.
But you do all the Airbnb. I mean, one side of this is really the property due diligence, and the other side is the Airbnb due diligence.
Yeah, right.
Okay. So on the Airbnb due diligence, you would use maybe AirDNA, which is a Airbnb income statistical website that is a tool for analyzing possible Airbnb income. And that's called AirDNA. I've interviewed the founder on my show before.
Cool.
And I have another podcast called the Short-Term Rental Profits Podcast. And so that's a tool. And then just research Airbnb itself and see what other hosts are doing, what their calendars look like, what their nightly rates look like, what their reviews look like.
Yeah.
And just get a feel for it. This takes a lot of time to really dig in and just get a feel for what's going on.
That's a good point. Like just go down, get on Airbnb and figure out who's doing Airbnbs down there, and reach out to those folks, Tom, and just see what intel you can gather from the folks that are already Airbnbing down there.
And as much as I don't necessarily want to recommend Facebook for anything because they're evil, and so is Google and Amazon and Uber, and they're all just big tech companies. But I'm sure there are Facebook groups for Airbnb hosts that have properties in Mexico and other foreign countries. Get in those Facebook groups and network with those people.
Absolutely. Okay. Hopefully that helps. At least get you moving. Get the ball rolling here.
And I'm a little concerned. How's the sound here, folks, on my side of the thing? Open Door is Zillow.
It's a mess.
He's
Yeah, we got a
saying,
lot.
yeah, okay, all right.
In a good way.
Yeah, it's all good.
It's
It's
super
really
fun.
good. Okay. I'm going to move this a little closer because I just want the sound to be
I
good.
wish
for
we had
our
like a stool that we could just set that
I
right
know,
on top.
it's
You know?
yeah, folks. We're doing things very, this is very impromptu here, which is kind of cool. You must admit. Okay,
Kind of
Gene,
fun.
go ahead.
Oh,
I'm
no, we
going to grab a couple of pillows.
We could put a couple of beer glasses underneath that and prop it up. That might work.
we could build
If we get one more beer
pyramid
glass,
of beer bottles.
yeah.
That would be a good excuse to order more beer.
I could. I'm
'Cause
down
then
if
we'd have
you
more
are.
beer
Yeah.
glasses. Okay, maybe we'll try to summon a waiter at some point. Okay, anyway,
Somebody's
go
got to
ahead.
show up. Okay. Well, I guess if Jason's on a mission to find beer, I don't necessarily understand.
No pillows.
Oh, pillows. Okay. I was gonna say, I don't know how I'm going to answer your question for you. Okay. Anyway, Jason, since you're running around, hey, Jason, I'm a longtime
ready.
listener, first-time caller. I'd like to hear your thoughts on Canadian real estate in terms of RV ratios and securing the loans with a 30-year fixed mortgage, which are not existent in Canada, as far as I know. That is correct, Stan. I live.
Hey, that's better.
Oh, that is way better. Yeah, I live within 100 kilometers of Toronto, and the housing prices are just insane. Yeah, 10 to 20% overbids are common here. I don't understand that, but I get it. I own a triplex building, and even with rising rent prices, my RV ratios are barely scratching the 0.5%.
Yeah.
The only way to get above the 0.5 RV ratio is through short-term accommodations like Airbnb.
Right.
Overbid. Oh, I already said that, which is not sustainable long-term for me. Okay, so you can't do Airbnbs long-term. I also don't see any linear markets in Canada. We don't have the options of locking in a 30-year fixed. Best we got here is a lender at 8.75 for 25 years.
I mean, that used to be a good rate, but not
Man, it's
anymore.
like the Reagan years, right? I'm ready to look elsewhere considering our totalitarian political regime. Currently, I'm back home in Serbia looking at least to diversify my political and currency risk. Am I crazy for not wanting to ride what I think is a Canadian real estate roller coaster? Thank you, Stan.
Stan, no, I think you're smart not wanting to ride the roller coaster. In Canada, all those major Canadian cities, and I've been to all of them, and I love Canada, by the way. I love Canadian beer. I love Labatt's beer, and I love Canadian rock bands like Rush and Triumph. Okay, they're awesome.
Oh, yeah.
Look, all those major Canadian cities are cyclical markets. They're very overvalued. Vancouver would probably be the poster child for the most overvalued market in the world almost.
Yeah.
It's a beautiful city. But those markets just don't make any sense. You can't make any sense in Vancouver, Toronto, Montreal. It just doesn't work. Yeah. That's a speculative market. The only way you can do it is with a short-term rental. And, I just don't know enough about it. So, but I would stay away from it. I would get good linear markets. And of course, the U.S. is a very special real estate market because we do have the 30-year fixed rate mortgage, which is a very unique to the U.S. idea. At least 30-year fixed rate mortgage is super low interest rates.
Heck yeah.
Yeah.
It's one of the few things we have left.
Yes.
Apparently.
It's a great thing we have left. It's,
Yeah.
It's basically a government welfare program for real estate investors. So take advantage of it.
Yeah, take advantage of it if you can.
Yeah. Get your welfare.
Okay, this one's from Tim. Tim asks, hey, Jason, wanted to understand if there are options for Australian citizens to purchase property in the U.S., and if possible, how do you go about it?
There are, but you're not going to get this awesome financing that's the Fannie Mae, Freddie Mac financing that you get if you're a U.S. citizen. Same with Canadians. But, there's some financing options that are not too bad.
Okay.
Not too bad. And we can help you with that. We can refer you to those financing options available to foreign national buyers. And just reach out to us through jasonhartman.com, and we'll be glad to help you with that.
All right. That was a layup right there, Jason. Yeah. That was an easy one. We'll get you set up, Tim.
We have a lot of requests for that.
I believe it. People are looking
and
to.
we have a lot of guacamole left here too. So
well, I'm going to take take advantage of the guacamole when I'm not talking. Okay, this one's from Jeff. He says, "Hey, Jason, I'm looking to purchase a single-story Frisco home near Dallas, but prices are booming and they sell quickly. Ideally, I'd buy in a recession, but do you think property holds up even in tough times due to people wanting a hard asset or home prices are falling like 2009. When do you consider it a good time to roughly buy? Solid metrics to purchase in a range. My thinking is inflation adjusted price index around 120 seems.
I know where we need this. We need it up here. Go ahead.
Ideal purchasing prices. Okay, I just messed that one up.
Well, okay, Frisco, Texas, not to be confused with San Francisco.
Right.
Obviously.
So it's a bit of a timing question in a sense. Wants to buy, but it seems like a lot of people see the writing on the wall and they're buying hard assets because of inflation.
Yeah.
Things going on with the economy. Like, what do you think about that? Do you think you should just jump in there and start picking up some stuff in Dallas?
Yeah, I think that's pretty good. I mean, look at these Texas cities have gotten much more expensive. We've helped hundreds of investors over the years buy properties. And if you count the major cities, Dallas, Houston, Austin, San Antonio, we've helped probably a couple thousand investors buy in those markets.
Yeah.
And they're Texas is business friendly. It's got all the right ingredients except high property taxes. You do have very high property taxes in Texas.
Yeah.
And it is becoming more leftist as we speak.
Sure.
There's the meme out that you may have seen. Don't California my Texas.
Arizona, like
don't California my Arizona.
It's like a cancer.
Yeah, it grows and spreads.
I don't understand the logic behind wrecking one state and then going to another state.
It's nuts. It makes no sense.
It
is what it is. We're human. We're funny creatures. Yeah. And so I would assume that Frisco is probably a little bit overvalued right now, but I don't think it's too extreme. So
in the context of things too.
In the greater context of things. Yeah.
Yeah, I totally get that. So, solid metrics to purchase in any range. I guess just the price index around 120 seems ideal. What's that mean, Joe?
Let me ask this guy if he'll send our waiter over.
Sure.
Bring us over. Sir, hang on. I gotta get some beer. Sir.
So this is kind of what happens when you have a little hour, like an hour or two to kill before a live stream, and you had a beer or two before a live stream. It kind of ends up like this. Jason's over there grabbing the waiter so we can get more food and beverages. Hey, Jason's living in Florida. He's thinking about coming out here to Scottsdale to join the cult of rebel capitalism. And
the cult is not located here. I lived here for 6 years. I already know this place.
Yeah, he's been here, done that. Check that box.
It's a great place.
So anyway, Jeff, thanks for the question. Hopefully I didn't botch that too much. I know my reading kind of sucks. Where's my glasses? That might help a lot. All right. So this is from a Kailua boy. Actually, he's in the chat today. Good to see you, buddy. Thanks for hanging out with us. He says, "Hey Jason, I'm just a surfer dude. I live in Kailua on the island of Oahu, God's country. Oahu is a seller's market, low inventory and above asking price for homes. The median price,
place.
It is, man,
but overpriced.
The median price for a single family home is $1 million. I own a property worth 2.4 to 2.5 million, and have had many people tell me I should sell, but I'd have to pay a lot in capital gains tax, and I wouldn't be able to leverage the equity anymore in my home to purchase other properties." Good point.
Yeah, but you can, as long as you rebuy, you can defer some of that capital gains tax.
Yeah, that's right.
200, I believe, 250,000 if you're single, 500,000 if you're married on a personal residence.
There you go.
On investment property, of course, 1031 exchange, defer 100% of the tax.
Yeah, there you go. So you can look at it like that there, my friend. Okay, so every time I tell myself to wait for the housing market to timing markets, every time I tell myself to wait for the housing market to go down so I can purchase more property, it never does. Obviously, that's why we don't time markets. Right. It continues to go up. I thought with last year, lockdowns, restrictions, the outlawing of Airbnb in many parts of the island, business closures, people would be fleeing high mortgages, but it's been the opposite. We have had an influx of tech people who are mandated not to work in their office, so they buy up many of the properties and work remotely. Yeah, I could see that.
Yeah,
leaving
I could too.
Crummy San Francisco and then cruising to Hawaii.
I'd much rather live in Hawaii than San Francisco for sure.
So true, true. So he goes on to say, "I agree with Robert Kiyosaki's Hawaii is a communist state."
We were at Robert Kiyosaki's home for lunch yesterday.
There you go.
We had this beautiful luncheon at Robert Kiyosaki's home.
How was it? Where does he live?
Oh, it was great. He lives in, I shouldn't say that.
Oh, okay. He lives in a beautiful paradise.
He lives in a beautiful place here in Phoenix near the Biltmore.
Okay.
And the funny thing is, I took a picture with Robert Kiyosaki right near his Ferrari.
The yellow one?
He's got this yellow Ferrari, and the
Big
license
banana?
plate says C+. And he brags about being a C student.
Oh, yeah.
But he wants to buy the license plate that says C-.
That's hilarious.
and he spoke to our group yesterday before we went to his house,
Oh.
and had just an awesome luncheon, and it was just a.
Did you meet Kim? Did
great
you see Kim? Was she hanging out?
No, Kim wasn't there.
She's
and
doing business stuff,
she's
right?
back east right now.
Oh, okay.
And so it was just Robert, but I saw his. He's a hunter.
Is
And
he?
he's got a whole collection of hunting trophies.
He's out there kicking everything's ass.
Yeah,
huh?
he's an impressive guy for sure. Yeah.
Oh, right on.
Amazing. But it was a beautiful luncheon there.
Oh,
And of course he's from Hawaii, right?
oh, that's right.
And so he rails on the leftist policies
Sure.
and so forth. But it is a beautiful place, no question about it.
Yeah, yeah.
And better than San Francisco for sure.
Well, yeah. You can't. I mean, it's hard to. That's the bottom of the barrel right there.
Yeah.
San Francisco. I don't see how you can.
I have a question for our listeners. Can you hear me crunching the chips?
Probably, but hey, you guys know where we're at, what we're doing. So
Because I'm going to back up when I chew a chip, so you don't hear me
Yeah.
crunching. I think it's quite rude.
unless you're doing it, then it's okay. Right?
Well, yeah.
I don't know. All right. Anyway, I'll move on with the question here, Dave. So David continues with, I agree with Robert Kiyosaki's Hawaii is a communist state, very blue. He recently said he is heading to Hawaii to sell office properties. He's beginning, now Dave's beginning to think Hawaii is not really a good place to invest in real estate. He does have a friend who now owns 3 homes and has turned them into elderly care facilities. He's doing very well.
AKA assisted living. Is
I was
what
going
it's
to say,
usually called.
he's probably getting some sort of state subsidy as a result of
Yeah,
that.
possibly.
He's doing very well, and then Dave is considering doing something similar. Man, you want to turn that $2.5 million property into an elderly care facility?
Oh, well, those can pencil.
Okay. Well, I'm wondering if the Let's Go Brandon jab mandates are going to continue to cause people to lose their jobs, income, and eventually force a large portion of real estate to sell off in Hawaii, lowering the cost of homes. What are your thoughts? Man, it's an island. It's a paradise.
Yeah.
I just don't think there's ever going to be a time where living in paradise is going to drop in price, especially in these highly inflated markets.
Well,
But anyway, what are your thoughts, Jason?
We're in a world where we have a mass affluent population,
Indeed.
and the rich are certainly getting richer, and the middle class is getting hollowed out. Sadly,
Yeah.
it's the way it is, and hopefully we can help reverse that trend by helping some of you to move up into the upper middle class if you're middle class now, or move into the wealthy class if you're upper middle now, right? We want to help you move up a step, right?
Mhm.
And you do that mostly with income property. It's the most historically proven asset class in the world. So these prime properties, even if the government is leftist, there's a high likelihood that they're going to continue. Just on my podcast last week, I talked about, I follow some different private jet programs, and I'm always being pitched to join them. And I did join one. I'm a member of one of them. And but one of these newsletters I get talked about how 2 of the major private aviation providers have now canceled their jet cards. They won't sell anymore.
Oh, because it's
NetJets was
supply and
one,
demand probably.
And there's too much demand. They don't
Yeah.
have enough planes
Nobody wants to wear masks
to fulfill the demand. Yeah,
Right.
and they'll pay a huge premium to
Sure.
fly private.
Sure.
And so but that just goes to show you there's this consolidation of
Yeah.
wealth at the top.
It's been pushed.
And it is just, never did I think we would live in a world where so many people, there would be so much demand for private jets
Yeah.
that they would have to literally cancel their programs and stop selling memberships.
You think about
Can
that.
you imagine a health club not selling memberships?
Imagine
Right?
imagine a private health club not being able to sell memberships.
Nobody wants to turn
because it's
business
just
away.
a saturated market of
Right.
rich people.
Yeah.
That's what the markets
crazy.
have done. That's how distorted they've become.
Mhm.
It's just there's too many rich people.
Yeah, no, rich people wait in line now like everybody else.
Yeah,
It's-
it's
and,
crazy.
And
thought.
suddenly, what was considered rich is not considered rich anymore.
No, not at all.
Because
Not
the
at all.
numbers, because we're living in this era where there's just this massive amount of inflation. This currency is being printed
Oh yeah.
like it is going out of style, and it's the numbers are just becoming meaningless.
Yeah,
It's like becoming monopoly money.
It's
Crazy.
you could have 7 figures in the bank. I'd consider you a high middle class. if that.
Nothing.
High middle class.
Your bank won't pay
I'm not
attention
counting
to
the
you.
equity in
Yeah.
your house. I'm talking about literally you have 7 figures sitting in.
Well, it's interesting you say that. I was talking to one of my bankers, and I was saying, I got a good size amount of deposit with you, and he says, you know what? You really don't get into the next level until you have at least $10 million on deposit.
There you go.
Who keeps that much money in the bank?
Who would
that's
be that
insane.
dumb, right?
Yeah, the money is just being devalued,
Yeah.
and the banks don't even care about your deposits. What they care about is if you borrow money.
Yeah.
Because money is lent into existence. And that's one of the things that really, when I started studying economics deeply back in 2003, 2004, that's one of the things that was very hard for me to get my head around, is the idea that money is lent into existence.
Right.
That is how money is created,
Mhm.
through loans.
Mm-hmm.
And we talked about that on both channels. So everybody.
And when interest rates are
Those are
extremely
the loans,
low, you see a lot of money being lent into existence, right?
There's just too much money being created out of thin air.
Yeah. Anyway, he goes on to say, he says, like, well, should I consider investing in other parts of the U.S.? I have up to about $200K for a down payment.
Yeah.
So, we talk a lot about linear markets, cash flow, real estate. $200,000 can buy you a few properties.
Yeah, you can buy
Down
probably
payment
4 properties
your
in
fixed
good
rate.
in good linear markets.
Right.
You can buy in several Florida markets. You can buy in Memphis. You can buy in Indianapolis. These are these good cash flowing markets where properties make sense the day you buy them, and they just work.
Yeah.
They just work, and you're going to get good cash flow. And you can buy 4 properties, so you've got some diversification there.
Mm-hmm.
What I always say is be in the most historically proven asset class, income property, but diversified geographically.
Big time. Yeah. Multidimensional too. That's a big thing about real estate I really like about it.
It's a multi-dimensional asset class.
Yeah.
So you earn your return in lots of different ways.
Yeah.
And Gene, let's expand on that. That's worth talking about.
Sure.
So one-dimensional assets.
Sure. NFTs.
Precious NFTs, cryptocurrencies, precious metals.
I was going to say
crypto. I know you can do some
you
funny
could
things
yield
with.
and stuff, but when you brought that up though, the first time I heard that was an aha moment for me, because I looked at investing completely different. Because I always looked at investment as something like, you're going to throw some money into something and hope you can sell it for more money down the road.
Right.
So
it's speculative.
It's very speculative.
The whole strategy is buy low, sell high.
Very one-dimensional.
That's it. One dimension.
Right.
Yeah.
And real estate just gives you the tax benefits. It gives you the cash flow. It gives you the appreciation over time. And right there, that tells you it's multidimensional.
Multidimensional.
3 things right there.
Well, there's more than 3, because at least it's ideal. IDEAL. That's the acronym that's been used. Right. Income depreciation in a good way. Tax benefit.
Right.
Equity buildup.
Yeah.
Appreciation
Mm-hmm.
and leverage. Now, there's actually more, because they didn't include, that's the old thinking, they didn't include my trademark term, inflation-induced debt destruction.
Yes.
Right?
Yes.
And so it is a beautiful asset class. But to go beyond the one dimension of, say, precious metals, mostly with cryptocurrencies, I know there's some
you can yield on some.
Stocks that don't pay dividends, right? The next dimension would be a 2-dimensional asset class. And that would be like a dividend-paying stock. Buy low, sell high, get dividends in between,
way up.
right?
Yep.
But with income property, you get all these dimensions, and that's what makes it so great.
That's the beauty of the whole thing. And and if you start looking at investments as through the lens of how many dimensions it is, how many different ways you can save money or throw off money, you start looking at things differently.
You do.
That snapped me out of the NFT thing really, really fast. Right?
Yeah.
I'm like, wait a minute. There's something that,
So someone listening, not everybody even knows what an NFT is, right?
Sure.
So that's a non-fungible token, an NFT, right? And basically what people have done is they've created assets out of things that are not material.
Sure.
They're digital things, right? So, for example, I think I should NFT my first podcast episode and sell it for like $3.2 million.
You can try. There's somebody buys it.
Let's open the bidding right now. In the comments section, tell me how much you would pay for an NFT of my first podcast. Yeah. But what an NFT does, which is kind of interesting, is it makes the digital assets scarce.
Mm-hmm.
Because a digital asset, when it's copied, it's fair to ask if it's really a copy. There's no such thing as a copy because it's an exact replica.
Yeah.
If you take a Picasso and make a copy, that is not exact.
No.
It can't be exact, right? There's only one.
Yeah.
Of
what's the difference between having a legit Picasso on your wall and having a calendar where the month of May shows a picture of Picasso?
The Picasso painting,
right? You're like, well, what's the difference? You're like, well, you know the difference intuitively, right? In the NFT world, it becomes a literal difference where it's like, this is a unique thing. I guess maybe in the future when we're in the metaverse and we're spending more time there, and you're walking around and you're seeing these unique NFTs floating around in this one-of-a-kind museum, and you're being charged a cryptocurrency to get into it or something,
or
make more sense.
Or see it or whatever,
But as an investment and so forth, it's probably not the best.
Okay, so there is a crypto guru. And he publishes a newsletter called Pomp Letter.
Anthony Pomp.
It's great. It's really good. He's a smart guy. Okay,
Pompolino. Yep.
And so he did a thing, an article maybe 2 weeks ago, where he said he changed his mind about NFTs.
Oh, did he?
Yeah, he's backpedaled and now he likes them. Right?
Okay.
Unless that was an April Fool's joke. That was an April what?
First of all,
it was. And basically what he said, there are so many applications. So, for example, if someone buys like an NFT memorabilia of a sports something, right? Like a
Joe Montana rookie card.
Yeah. But what happens with the NFT is the NFT can be connected to the internet. Yeah. So it can be an internet connected digital asset.
Mm-hmm.
And if that same athlete wins the Super Bowl after you bought the NFT from their other Super Bowl winner, or whatever, right?
Okay, there's an accumulative process.
It can change.
Yeah.
To celebrate the new thing. So the NFT becomes a living thing.
Yeah, I can see
Which is kind of interesting.
That's super cool.
I mean, I give them some credit.
The NFT thing.
I'm not saying I would invest in them. But.
No, I agree. There's definitely lots of traction there, and it 100% serves a purpose in the world of meta, and even today with the world of speculation. But as a multi-dimensional asset class, it fails really bad. Yeah. Unless you're the owner of it.
Oh no, it's totally speculative. It's one dimensional. Buy low, sell high.
Yeah. So I mean that's the point. The point is you could put your investment dollars in better assets than NFTs. That's the point. But yeah, it's going to change the world in so many ways when it comes to music and royalties and things. I mean that way.
We'll see. Yeah.
I mean it's the real cool thing about NFTs. Not to be stuck here, but if I'm an artist.
This is the real estate episode, right?
This is the real estate. If I have a digital house I'm trying to sell, I can actually set it up so that the royalties continue to come to me even though it's been sold multiple times, which doesn't happen in the real world. I sell it to you, you sell it to somebody else, I'm the artist. I don't continue to see royalties coming from that thing as it's been sold multiple times down the road.
So in other words, just to elaborate on what Gene is saying, so in the NFT world, because it's on the blockchain and that's how it's secured, when the artist sells the painting, you get paid once, but this way the artist could get paid forever. As transfers
so you can see.
It is interesting. Yeah,
you can see. You can definitely see how the music business is going to change. And everything else.
And hopefully it will decentralize it, and that's what the whole concept of DeFi is: decentralized finance. Right, and that's what crypto is bringing to the world. Hopefully, we'll see if it happens, but it'll hopefully disintermediate banks and big evil record companies that have been screwing people.
All these
for
protocol
decades.
owners and copyright controllers and gatekeepers.
The gatekeepers. That's a lot of abuse there.
There's a lot of abuse there, so we can see some improvements over time, for sure. Okay, cool. Let's move on to the next one. This is from Jake. Jake asks, Jason, have you seen the insane policy in New York, Ithaca, about the decarbonizing their real estate? It seems like this trend of making it more expensive to own and operate real estate has been started. I understand you are a proponent of owning real estate in friendly landlord states. However,
landlord-friendly states,
However, you cannot ignore the trend of this continuing. The U.S. government is trying to overreach their power into the states. The train to 2030 of owning nothing and being happy has left the station. We may still have some time, 5 to 8 years, before this is fully implemented. How will you prevent the inevitable from hurting your real estate value? I understand the low 30-year rate mortgage is a great hedge on inflation, but the U.S. government has gone bananas They will and are pushing insane new policies, mandates, and laws like we have never seen before. In my opinion, the government will be the biggest unknown when it comes to real estate. Anything and everything is on and off the table. You think real estate is a safe bet when the future is highly unknown?
I will answer that question first with a question. And it is what my listeners have dubbed the Jason Hartman question. You know what I'm going to say. Compared to what?
Compared to what?
So,
compared to
sure,
historical.
I agree. Listen, the government is out of control. The central banks are out of control. There's no one who has a brain disagrees with that. Yeah, the fourth turning, Neil Howe and Strauss's co-author.
Yeah.
It's compared to what? I mean, look at what else are you going to do that is better? I mean, if you do securities, that is so much easier for the government and the tyrannical dictators to attack, because that's simply the stroke of a pen in a law. They just say to all the brokerage companies, assign those accounts to us, or collect a higher tax, withhold money from the owner.
Sure.
Right? With real estate, it's so fragmented.
Yeah.
One of the things that frustrates real estate investors, and I've been saying this for 17, 18 years now, is the fragmentation. In every place you own property, in every broker you deal with, every property manager you deal with, they all do it a little different. And this is super frustrating to investors. I understand that.
Sure.
But what I've always said is embrace the fragmentation. And that's really what keeps the big institutional players out of our business and leaves the opportunity for us. Now, I know what you're saying, and you're probably going to make a comment right now. Okay, hold on for a second. Let me finish my sentence. I get it that big institutions have entered the single-family real estate business. Okay, I certainly know about Blackstone and BlackRock and Invitation Homes and American Homes for Rent. Of course, I talk about that all the time.
Sure.
But they are like, this is nothing. It's like a pail of water in the ocean so far. Okay, now they're growing, they're getting bigger, but this is still not the main part of the market. It's like the Zillow thing that we started off with.
Yeah, right.
This is, in the grand scheme of things, this is like nothing. They're not even a player yet.
Yes.
They're getting bigger. I get it. But they don't like the fragmentation of our business. They want to be able to deploy $1 billion worth of capital with a mouse click.
Yeah.
And a due diligence report.
Yeah.
Maybe, right?
Yeah.
This for them is hard. And look at all the complaints they're getting. Just look up all the complaints and litigation against Invitation Homes, for example. The tenants are railing on them. And, the government is likely to institute some regulations to protect the tenants.
Yeah, sure.
Because they're just abusing, big always abuse the small.
Sure.
It's just sad story of life.
That's history.
And so it's happening. So look, what else are you going to do, right?
Yeah.
I mean, if you think crypto is the answer, I don't know, maybe, but they can regulate crypto too. They're already starting to do it. They can outlaw it. And, I know what all the people are saying. Here's the comments. They're coming up, right? They're going to say, well, they can't stop it. They can't stop Bitcoin. It's decentralized. Cocaine is decentralized too. Okay, so is heroin.
Yeah.
And yes, people trade in these things a little bit, but because they're illegal, there's hardly any market. It's a tiny nothing. Right?
Yeah.
So if you think that, they're going to sit back and let Bitcoin rule the world, it's just not going to happen.
Yeah, I think they wouldn't ban it, but they would definitely ban the use of it, or they'd make it really difficult to use it.
They can do all sorts of stuff.
And so what you're saying though is these big enterprises are not happy with the inefficiencies of our real estate market in a sense. Right?
They don't like the inefficiencies and the fragmentation. They want ease.
Yeah.
They want to deploy large amounts of capital in big asset classes that are smooth and quick and frictionless.
Yeah.
And real estate's got tons of friction.
Sure.
And if you, the mom and pop small investor, will tolerate that friction, you can make a lot of money. That's your edge. Yeah, it's your unique. It's your unique.
At least for now.
Thing. Yeah, absolutely.
I guess the questions I typically have are, is it malicious intent or is it just incompetence?
It's both.
That's driving things in this direction. And you got to look at like political movements in a sense too. these movements have like a finite life, a shelf span,
Shelf life.
because the Democrats are in office right now, and you can tell that, say, this Biden, the Biden presidency's got an extremely low approval rate amongst everybody. Right
Yes,
now,
it
right?
should.
So we know, like, when 2022 rolls around, it's going to probably be a red sweep. So now you're going to get more GOP. I mean, and a lot of those guys too. I don't like them very much either, but I like them better than the Democrats. But I think what's going to happen over time is you're probably going to see a lot of checks and balances, a lot of push and pull. Right now, the lefties are in there, and they're abusing the hell out of everything. I didn't realize how tyrannical and overreaching they were. I have to admit, I've been really ignorant when it comes to politics up until like this last 2 or 3 years.
But your idea of ignorance is like the common person's idea of brilliance.
Yeah, probably. But I had no idea that they were like, oh, hey, give them enough room and they'll become Nazis overnight. I just didn't think that would happen, but it turns out that's the case, right? So, and I guess it could probably happen on both sides of the spectrum, but what we'll probably see is we're starting to see a little bit of right now is a lot of pushback in the courts,
right?
So you're starting to see a lot of this stuff being challenged, like. At federal level, you're starting to see like these things, these mandates and stuff like that. Courts are starting to say, wait, this is so unconstitutional what you're trying to do.
Folks, if you're in the United States or no matter where you are in the world watching this right now, right? On my podcast, I've got listeners in 189 countries. That's almost every country.
That's a lot of countries,
right? Yeah. It's pretty amazing that we have that reach, and until the censors deplatform us and control us, right? But for now, we've still got it, right? And just thank your lucky stars that the founding fathers of the United States of America, even if you're not American, they set an example for all humanity. And the system we have is just, it's hard for a tyrant to take over. The pendulum goes back and forth. And when Obama got elected, all my Republican friends were freaking out. And I'm like, calm down.
Cool dead hands, Obama.
Yeah, of course, Obama's going to screw things up, and he did, of course. Right. But, it is very difficult to ruin a country. It takes a very long time to ruin a country with the checks and balances we have.
Sure.
I mean, look at how tyrannical some of these people are. But there's just a lot of systems to stop them from doing that. Yeah. And it's a wonderful thing.
And it takes a while for those to play out. Like you could use the rent moratorium as a good example of something that the CDC enacted, right? Yeah. Like they
who would have thought it was come from there?
Oh, I know. Right? They just literally they just basically became contract lawyers overnight and inserted themselves into the middle of a contract.
Landlord deals.
Yeah,
but the CDC, what do they have to do with landlord?
And it wasn't until like a couple of months ago that the court struck them down and said you couldn't do that. And quietly, of course, the media being who they are didn't really mention anything about it, but those quietly went away,
right?
Because they were so unconstitutional. So what happens is they do these knee-jerk reactions and they impose these draconian measures on everybody, and then it's up to the courts to solve them, and that takes time. So I think in a lot of ways it's like truth and justice will have its day in court, honestly, and hopefully there's just enough rational judges that will.
Gene, can we take a question from my listeners? I got a couple questions here, and these questions are coming in all caps, so they look important. Okay, so here we go. No, Gene's great, man. Gene is awesome. Okay, so thank you, by the way, everybody, for participating in here. And okay, so this one relates to George.
Great.
The rebel capitalists, we're tying it in here. So George G is always saying 5-year debt is a risk. Most commercial debt is 5 years, and longer debt than that is expensive. Thoughts how to navigate this, right? Well, this is the reason residential is so much more favorable than commercial.
Oh, yeah.
Because the commercial financing is just not as good as the residential financing. That's why we love the good old humble single family home.
30-year fixed-rate mortgages.
Yeah, absolutely. And then terrible to plan to have a short-term debt. Some of these questions are being answered by other viewers right now.
Smart people in your chat, probably.
We got so many smart people here. Okay. So anyway, I wanted to grab that one. Go ahead.
Yeah. Okay. Cool. All right. Let's move on to the next one here. Thanks, Jake. Hopefully that kind of helped you out. Let's see. This one's from Max. Hey, Jason, what do you think about real estate moving onto the blockchain? What are your thoughts on a company like Proppy or Cater? I'm not sure if you're familiar with those two, but
I've interviewed several of those on my show.
okay.
Is there more to that question?
No, that's it.
Okay, so look, the blockchain is got so much hype behind it, right?
Absolutely.
And it's all great. It might be unhackable, or at least mostly unhackable, very difficult to hack.
Yeah.
And that's wonderful. But the putting real estate on the blockchain is not some kind of cure-all or panacea that everybody thinks it is.
Yeah, I can see that.
Because you have what's called the oracle problem. And the oracle problem means, and forgive me if I'm misunderstanding this, I'm no expert, okay? So write in the comments if I'm lost here. But what I understand it to mean is that it's only as good as the person putting in the data.
Sure.
So when the computer generation came about, they had this acronym called GIGO, garbage in, garbage out.
Sure. Yeah.
And the data is only going to be as good as what you put in, right? And that's the problem. To initially move the title of that real estate to the blockchain, some human is putting the information in there.
Right.
And that's where the problem occurs. Now, it could actually manifest as a bigger and deeper problem, because if as soon as the first entry is on the blockchain, and if it's wrong, if there's some mistake in it, then that mistake simply propagates.
Sure.
And that's
it's on the blockchain,
disaster.
right?
It's on the blockchain.
You have to
Everybody
fork
trusts
the chain or something.
Everybody trusts the Zestimate, Gene.
I guess
That's a Zillow. Yeah.
I guess the big question I have is like, what exactly is going on the blockchain with respect to real estate? Like, what are you putting on there?
Yeah.
Well,
title is one thing.
Okay.
And then also fractionalized ownership is another big one,
that makes a lot of
right?
sense. Yeah.
And actually, it's funny because I was up at Scottsdale Quarters today, and I was leaving a lunch with one of our clients, and someone comes up to me right on the street and says, Jason Hartman, I love your YouTube channel. And, this probably happens to George all the time, but to me, it's somewhat infrequent.
So we're out playing Frisbee.
Oh, hey, look who's here.
Yeah.
Folks, we have to take a break because the beer man has arrived. Thank you for coming.
Yes, of course.
Yeah,
what can I get you?
awesome.
Man, can I get a kilt lifter, please?
Sounds good.
And I'll have another one of those Dos Equis with the salt on the rim. And the lime.
All right.
Thank you
Yeah,
very
coming
much.
right out.
Appreciate
Thanks,
it.
Max.
Yeah, thanks. Awesome. And I tell you, one thing they do great in Mexico is beer. I love
in
Mexican
Scottsdale too.
Yeah.
Right. Yeah, right here, right now. Get the...
Right here, right now. So, folks, we better warn everybody because we're going to be on our second truth serum in a moment here.
Yeah, and I'm a light drinker, so.
Yeah.
Oh well, hey, that's how it goes.
But it'll just get more interesting.
Great coincidence. So Max was asking the question. The guy just showed up. His name was Max.
That's
Planets are aligned.
accidents. There are no accidents.
Yeah.
But yeah, so the blockchain offers some interesting stuff. So maybe you could securitize fractional ownership in real estate.
Yeah.
Maybe it's a giant,
That would be
office
cool.
complex.
I would love to
or it's
own a
single
piece of a
family home.
mansion or an Airbnb.
Whatever,
Just
right?
to-
And it's fractionalized on the
Yeah.
blockchain.
Yeah,
And the question is, usually the SEC wants to stick their nose in that
of course.
with a bunch of regulations.
Sure.
Now that got a little easier, and to his credit, Obama did sign the Jobs Act. I'll give him some credit for that. That I
Okay.
think was a good decision. Securities law and allowed crowdfunding to happen and things like that. And you wonder if there needs to be any SEC involvement when things are done on the blockchain with smart contracts,
Sure.
because the smart contract simply makes the decision.
That's programmatically put in.
Right.
Yeah, you don't necessarily.
That
need
was the
human error,
connection
you know?
of the person coming up to me today at Scottsdale Quarters
Oh, okay.
is in that business.
Yeah.
I said, "What do you do?" And the explanation was a crypto executive. And I said, "Well, tell me more about that."
Crypto executive.
That basically has a company that helps financial advisors use the blockchain to securitize investments.
Oh, fantastic.
Right?
Yeah, yeah.
And the idea was, it's a gray area now because they haven't legislated.
Somebody's
it
got
yet.
to be
But
the pioneer.
do you even need the SEC to be involved in that?
Mhm.
Because all they're doing, they're not doing what a broker dealer
It's
does.
more like a blessing once it's.
They're just saying you can get into this asset, and we're a platform that facilitates the access to it.
Mm-hmm, mm-hmm.
Do you need to be a brokerage house for that?
I don't see why not.
Yeah,
Yeah.
that's interesting.
Yeah, I think there's a lot of efficiency that comes with the blockchain. And I brought this up last time. I just, there's so much redundancy in the paperwork and the human man hours that go into doing paperwork. The 45 days to close, could be done in 4 to 5 days.
Yeah.
If things have been.
The real estate closing process is absurd.
Yeah.
Why should it take 30 days to buy? One of my investment counselors years ago said this to me. He was a pilot, and I was buying a plane at the time, and he said to me something really interesting. He said, why does it take 30 to 45 days to get a mortgage on a house that doesn't move?
Yeah, good question.
Yet you can go buy a $4 million jet that can go anywhere on the planet and completely disappear.
Yeah.
And get approved for that loan in about a half hour.
Yeah. It's like an industry creating job security, right? It's like
so dumb.
It's like you realize real fast how many of these industries have just created work for themselves to justify their work.
Makes no sense whatsoever.
Yeah. So that's a lot of the I guess you'd say the deflationary aspects of technology.
There are a lot of things in the world that just make no sense.
Yeah.
But yes, the technology is definitely deflationary, and bad fiscal and monetary policy is definitely inflationary.
I would say real estate moving on to the blockchain is deflationary.
Yep, I agree.
For sure. Okay, let's move on to the next one here. That was from Max. Thank you, Max. This is from Michael Oz. He says, hey, Jason, love the info you bring to the table. I'm looking to exit the U.S. for the next few years with my family. I just closed on the few acres south of Tamarindo, which is in Costa Rica, as it checks many boxes for my family and I. I will need to build and anticipate a 9 to 12 month process until complete. I'll be spending at least 4 to 6 months in Brazil, enjoying the 5-to-1 ratio USD to the real, and starting to contemplate a purchase in Brazil as well. Now here's the scoop. 0 real estate holdings in the US. I could have used your adage, buy real estate and wait, don't wait to buy, about 10 years ago, it says. Number 2.
You can still use it, because you know what? I just want to comment on that for a minute. I've been saying this for many years. Every real estate deal looks good in the rear view mirror.
Oh yeah.
It always seems expensive when you buy it. And it's hard to know how much things will inflate in the future.
That's so true, man.
Folks, don't agonize too much about this stuff. The only thing I'll say is cyclical markets probably overvalued. Linear markets, no, they're still cheap.
Isn't that crazy?
Yeah.
It's like most of us have just lived through like one downturn in the markets to real estate. You've probably been through a few.
A few, yes.
But,
and I remember, look at a chart.
Yeah.
Okay. Just look at a chart. You don't have to have been through anything. Just go back and look at a chart.
Just look at it.
And realize how, people used to think $60,000 for a house in Los Angeles was expensive.
I thought $350,000 for a house. I was like, am I crazy? Yeah. What am I doing? I turned around and sold that house for almost $800K, like a few years, 10 years later.
Absolutely.
Right.
But remember, it's not the price of the house, it's the payment on the house.
It's the payment.
And so
month to month, right?
Max is here with the beer.
Oh, fantastic.
Okay. All our live stream participants must give Max a big hand, because he's bringing this truth serum.
Thank you, sir. Thank you.
Look at him. Hey, Max, say hi to the audience here.
Hi guys.
Right here. You see my Mac camera, right?
Okay, we got videos all over the place.
Thanks, Max. Appreciate it.
Of course, yeah. And I can just leave this right here for you when you want to close out.
Take care of that.
All right. Thank you.
Alrighty. Enjoy it.
That's a good one.
Dean.
Cheers.
Oh,
Cheers.
That tastes so good.
Yeah. I love it. This is great.
See, folks, this is the biggest tip you'll get out of this whole live stream tonight, is you get a Mexican beer. This is Dos Equis with salt on the rim and a lime. Oh, so good. Now, Gene unfortunately didn't take advantage of that because he got a kill lifter.
Pretty basic, personally, but next time.
This is the beer of beers.
Yeah, good stuff though. Boy, no complaints.
Okay,
let's continue here. With Mike's question. So, anyway, so number 1, here's a scoop: 0 real estate holdings in the U.S. Number 2, the Costa Rican project will type approximately $300,000. Would this be an option, or am I getting a little too cute? Let's see. Buy a $300,000 plus or minus property for cash in the U.S., stick a tenant in there, and refi for the Costa Rica project. If that idea sucks, can you think of another tool that might be helpful? Any general foreign real estate investing tips? Greatly appreciated, Michael. Gene and Jason, kick some tires with me in Brazil. Oh, I can imagine, man. That's going to be so much fun. The food is great and the women are even better. By the way, I've got a Gracie Baja about, oh, cool. We can go do some jiu-jitsu.
Yeah.
Block for me. Awesome.
That
That's
sounds
cool. Mike
good.
does jiu-jitsu.
I have not. I've been to 87 countries, but I've never been to Brazil.
Yeah, I haven't,
been on my
been
list.
there either. I know
Now,
so many people.
the crime is pretty bad.
Oh, it's
so you got to be
Brazil.
careful.
Yeah.
Yeah, you got to be careful.
You gotta
And
be
the
careful.
corruption's really bad too. Look, if you're just talking money and investments, why do you want to do foreign stuff? It just doesn't work that well because it doesn't. You don't have the transparency in the market. You don't have the data. You have a very opaque closing process. You have a risky title process. Title in those in many countries is very hard to determine, and you don't have the beautiful 30-year fixed rate loans that are basically government welfare programs through Fannie Mae and Freddie Mac.
You definitely want, like George recommends, is like those inefficient markets in foreign lands like that will eat your lunch if you're not an expert. Yeah. And you don't want to go down there you don't want to go down there and just blindly get into a project. It's something you really want.
Listen, there's a lot of promoters.
Like you shouldn't be asking us for.
And I don't know. I don't know if this
Or
is Max
police
asking the question, right?
This is Michael Oz.
Mike. Okay, so I don't know if Michael's American or not. Did he say that?
Yeah, he's in the States right now,
Okay.
but he's thinking about going down to Costa Rica, and he wants to do a project down in Costa Rica. But to fund it, he's thinking about maybe putting somebody in a house up here, rent that out, but then hopefully equity strip or something.
A lot of times, a lot of these decisions are based on lifestyle choices.
Sure.
And people just want to move. They want to get out of the rat race. They want to do something different.
Yeah,
I get it.
Yeah.
I understand that. That's just human. But you shouldn't necessarily have your money follow that.
Good point.
Right? If you want to go spend time in Costa Rica, just go rent a place and enjoy it.
Yeah.
And then you can move around. You don't have to be just stuck in Tamarindo.
Yeah.
Maybe you don't like that.
It's probably
That's the best
better off
right?
buying houses in Florida and Texas and like you said, Memphis, Indianapolis, these cash flow linear bread and butter middle class homes, and then taking that cash flow and go live in Costa Rica in a nice place.
Don't confuse. Remember, to enjoy something lifestyle wise, you don't have to own it.
That's right. Yeah.
Okay, you can use it and rent it.
Yeah.
And that could be great.
Yeah. Which is what I do, right? Like you rent the place you want to live in because it doesn't make sense to buy it.
And dangerously, a lot of people buy this stuff and realize, this isn't for me. I'm in Costa Rica. There's high crime. There's potholes that are the size of a VW bug. Yeah. Okay, I mean there's
no MLS. It's not like
I know. There's no data. That's what I'm talking about. There's like no data transparency when it comes to the real estate market. Yeah. In the U.S., you just have a much cleaner system and much better rule of law.
Yeah.
So
despite the chaos, there's still few safe states to invest in for now.
Even the worst U.S. state is.
And even Costa Rica is very draconian. They got deals with Pfizer. They're forcing, there's vax mandate stuff going on down there.
They got Monsanto spraying crops. And,
the corporations have gotten to them too, unfortunately.
They've gotten everywhere.
Like Chris McIntosh was totally hip to starting a new life in Costa Rica, and he's
go rent your new life in Costa Rica and try it out for a while.
Yeah,
and he changed his mind, right?
Oh, he changed his mind with the vax mandates and stuff like that. Yeah, they basically Pfizer went in and just basically bought them out. And that's the thing about these South American.
They bought out the country.
Yeah, they're just
you can do that with
a corrupt corporation can go into a corrupt country and do deals. That's just the reality.
Very
of the situation.
easily and cheaply.
Yeah. And it's just the way it is, and unless you have, I think Mexico is the opposite of that. Like they're like, we're maybe corrupt, but we're not idiots, They're kind of like in that corner. But I don't know. I think the bottom line, Mike, is you just got to keep doing your due diligence. It's probably not the best to jump into something like that until you probably live down there a little while, and you've actually got some experience.
He has. I don't.
It's very possible, yeah.
But just go rent down there.
Well, he just says right here, he's like,
kick
some tires in Brazil. So if you know the market, you probably don't need to ask Jason questions.
I don't know the market as well as you do if you know the market. So
for sure. Okay, cool. Let's move on to the next one here. This one's from Francis. Francis says, "Hey, real estate guru, aka Jason Hartman. I purchased a primary property on the West Coast in Reno in 2019 and refinanced the same property to a 2.9% rate in the latter of 2020. In 2021, I moved and now rent out the property for $2,100, which gives me about $200 net gain. The property is located in the area where rents go for approximately $2,100 to $2,200. Question: I have over $100K in equity and would like to cash out refi. I'd like to cash out refi to reinvest, but what would that would mean losing the 2.9% rate, and assuming the current investor's rate, which would increase the mortgage and minimize my gains. A HELOC is a loan and put me in the same loop. What strategy would you recommend? So they got a little equity in the house. They realize if they're going to equity strip, it's going to mess with the loan, and they'll probably get a more expensive month to month on that. What would you recommend?
I would recommend equity stripping.
Yeah.
At these cheap rates, pull that cash out, get control of the cash, and turn it into something you can use elsewhere.
Yeah.
Your risk is actually reduced.
I guess he's more
equity.
concerned because he's getting his rent is $2,100, and that's about the same as his mortgage. And if he strips, then his mortgage goes up, and he loses that net rental, that what he's making month to month. Now, what I did was I looked at how much equity I had in my property,
But Gene, you know what I'm going to say here. Of course you do, because when you have the money out of the property, what yield could you get on it in something else?
Yeah, you could go throw that in there and offset.
It's so funny how people forget.
Yeah. That's
Like,
multidimensional. You got to think 3D chess here.
You're going to take that money out, and at the very least, you'll stick it in an S&P 500 fund, if not another real estate deal, and you'll make a yield there.
Yeah.
Which will compensate for the yield
It'll offset.
Positive cash flow you lost by yanking the equity.
But even
out.
if you don't want to do that, all you have to do, you don't have to pull out all the equity. You can go to your lender and go, hey, I want to keep the same month to month mortgage payment. How much money can I strip out of this bad boy? And they'll probably be like, well, we give you 70 grand.
The lender won't let you go negative cash flow.
Yeah,
They won't make the loan.
Sure.
Okay. So yeah.
I like just a personal example. I was able to pull $90,000 out of my house and not change my rent payment or my mortgage payment at all.
Yeah.
That was free $90,000 in cash. It was just deposited in my bank account because I refinanced and kept the same month to month. Yeah. So you have the equity in there, but it doesn't necessarily mean you need to pull the equity out. You can still keep the month to month, the monthly mortgage payment, and not really have to change anything. Yeah,
you're absolutely right. Gene, a couple of these questions coming in are interesting. So Nick MC Oz says, fantastic question. M Field, great explanation. But Kate Ringo says, like Pfizer isn't doing corruption in the U.S. ?
Oh yeah.
Come on, guys. Kate, of course we know Pfizer's doing corruption in the U.S., but it's harder to buy the U.S. because it's a much bigger expense.
Yeah.
Pfizer can buy Costa Rica much easier.
Yeah, the GDP of Costa Rica is less than what the GDP of Texas is.
Yeah. When you look at, for example, these social media companies, right? Do you know Facebook, if it were a country, would have the 78th largest GDP on the planet?
Yeah, think about that.
It's just, and that was a while ago. It's probably higher now. When I did that like a year ago, I looked that up. We're not saying that there's not corruption in the U.S., Kate. Of course there is. We know that.
Yeah.
But it's harder to corrupt the U.S. because it's a much bigger buyout. And there's just many more different parties and lobbyists and things like that. In Costa Rica or Brazil, you can just go in and make a deal with, some federale or whatever. It's just a lot easier.
When you see that, like the CEO of like Pfizer shaking hands with Ron DeSantis, there might be a little concern. I'd be like, okay, something's not right.
DeSantis isn't selling out.
He ain't selling out, right? Like so there's states you can still play in and participate in where you still have like the Constitution is respected, and maybe not at the federal level with respect to the current administration, but again, like I was saying earlier, it's like the tide will change and it will turn because we're Americans. We see what's going on, and even the ones that watch a lot of CNN, there's a third of them that are like going, "Hey, wait, this isn't right." Yeah. So
the pendulum swings back and forth.
Exactly. Okay, Francis, thank you for the question. I think we answered that pretty well. Okay, let's move on to the next one. This is Craig.
When you're drinking, you think you do everything well.
And I think we probably talk a lot and then answer a damn thing. But I know that's a path. We're gonna have to take a bite.
Hey, folks, at least Gene and I are having a good time.
Yeah. Sorry, fellas.
Guys. You know what? We've got to make a request of everybody watching, both in my group and in the Rebel group. Please get a drink and drink with us. Because we don't want to drink alone here, folks.
I know it's Monday. It's Monday.
Yeah, it's Monday. We have to celebrate.
Well, what else are you going to do?
It's Monday.
Go to work tomorrow.
Okay. How are we doing on the levels here? Who's ahead?
Oh man, you're doing pretty
I'm
well.
ahead of you.
Yeah.
Gosh,
I'll
something's
get
in my
there.
hand. I'm just compulsive.
Yeah, I'm the same way. Get this. You know how it goes. All right, let's move on to the next video. This is from Craig. Craig asks, Jason, how do you feel about the upside risk for the upside risk is for MF versus SFH investing?
Multifamily.
Oh, thank you, buddy.
Versus single family.
Acronyms
Yeah.
always screw me up. I was in the military for like 10 years.
Yeah, you'd know acronyms.
Yeah, except I'm an idiot when it comes to acronyms.
You're a Marine, right?
I was a Navy guy.
Navy guy.
Yeah, I was a Navy guy. And my dad said, never join the Marines or the Army. What, you want to get shot? That's what he told me. What, you want to get shot?
So the Navy was the safer bet.
Yeah.
Gene, tell us what you
Yeah.
did in the Navy.
I was an electronics technician. I fixed radars. I fixed GPS.
Cool. So like on MASH, we could call you radar.
Yeah, I'd be like
Yeah.
the radar guy. That was my job. I sat on a boat 300 miles away and, fixed radars. And stuff.
So here's the question. If we ever want, like a lot of these people listening might want to escape
Yeah,
the country if it becomes draconian.
for sure.
How low do you have to fly to get under the radar? See, nowadays, it used to be everybody said 300 feet.
It
right?
depends,
But
man.
not anymore. That's not true anymore.
Yeah,
because they have
well,
radar.
every
everywhere.
boat has a surface search radar on it, which is going to be surface level, which is relatively low.
And they have sonar.
and then you have the air search. I mean, there's really no.
But for air traffic control, right?
Yeah,
That's not. They're not coordinating with the ships unless they're really looking.
No,
for
yeah,
something
they
like
really
a
have to be looking
military
for you. I
operation.
mean, I honestly don't have an answer. I'd be bullshitting if I actually knew that stuff. I just fix
Okay,
things. I didn't know
doesn't
all the
matter.
facts or anything. What am I, an air traffic controller for crying out loud? Anyway, so Jason, so back to this question. How do you feel about the upside risk for multifamily versus single family home investing? 100 units and up.
So look, I've talked a lot about this on my podcast, and I did a show where I discussed this multifamily versus single family for about 45 minutes once
Okay.
a few years back. And if you go to jasonhartman.com and you just type it in the search bar, you can find it there. But there are advantages and disadvantages to each, of course. Multifamily, larger apartment complexes, and I've owned them. I've had a 125 unit apartment complex, actually here in Scottsdale with one of my clients, Stephen. And then we bought a 139 unit complex in Oklahoma City together as well when we did a 1031 exchange out of the Scottsdale one.
Yeah.
Made great money on both of them. They were awesome deals. However, multifamily, you have to understand you are running a business.
Yeah.
And you will have, like a business, you will have people you need to keep happy. Your tenants will be talking to each other. They live right next door to each other.
Yeah.
They will gang up on you and form a mutiny. And they will go on Yelp and Google and write reviews about your apartment complex.
Yeah.
And those could really hurt you.
That could.
Okay. Now, hopefully you're going to keep them happy, but listen, some people will just never be happy.
Some people are just negative
They're
Nancy's,
just
man. They'll
negative,
just get out there and
yeah.
that's what they get off on life is being pissed off.
They're just angry, yeah. And that's the way it is. So you just have to understand you are running a business. It's much less of an investment
good point.
than it is a business.
Good point.
And you can make a lot of money in business, right? Also, in multifamily, you're going to have a much more transient, lower quality tenant, generally speaking.
Apartment.
They're going to move around. They're going to stay a year and they're going to go.
So how does Kim McElroy hold it all together?
Well, he just understands that's the territory, right? And
does he have managers that are like? I mean, is he like living in his business all the time?
not
would it suck to be
personally.
Ken?
No, it does not suck to be Ken.
Yeah, that's
Ken-
my point.
Ken
I think
does
a lot of
very
people-
well.
Yeah.
But
money's good.
he has a lot of employees. He has about 300 employees that run all of that. Okay. So if it's just one.
Oh boy,
what's happening there?
We got a reset on the.
Did our internet die?
Yeah.
This one's working okay.
That's BS.
They didn't like what we were saying. Probably.
Maybe it just resets. Yeah, I just lost the network.
Are you on the public or the?
No, I'm on yours.
Okay, well, try to just go in again. Just turn it off and on again.
That's a bummer. You know what sucks about that?
Well, folks, maybe we should talk to my group here.
Well, you know what's good about.
Hello, people. So let's see here. Let's get some good questions.
Man, what a bummer.
Yeah, I don't know. It's weird that one would be off and this one would be on. I don't know. Okay,
I lost
so
all the numbers.
thoughts on reverse mortgages from John. Okay, John, that's a good question. I'm a fan of reverse mortgages in principle. The concept of them is a good concept. However, the execution of them has. Okay, I guess I picked up where I left off. Boy, I accidentally pushed the wrong button. Sorry, folks. Okay, so John, reverse mortgages was your question. Uh, the execution has been somewhat dicey, and there's been a lot of bad players in the reverse mortgage world who have taken advantage of people. Usually, they are for elderly people, and the concept is okay, but they have all sorts of limits to them, where they limit them only to a certain size mortgage, or the video should be unfrozen now, Mitch. I don't know. I'm seeing the video work on my end.
We're getting hotel shenanigans.
Are we
from the
really?
hotel here.
Okay, folks, hang on a second. I got a low battery too. I got to plug in now. These.
Like, it's not even showing up anymore. Like, it shows up everywhere else. But
Did you actually turn it off?
Oh, I didn't touch it. Yeah, I rebooted
turn
it.
it actual off.
Yeah, I rebooted
and then
it.
on again.
Yeah.
And go to the public or the guest. Try both.
Guest is no longer showing up.
Is the meeting one showing up? Hey, everybody, can you see me and hear me? Okay, it's working on your end, John. Okay, great. That's awesome. Good to hear. Good to hear. Reverse mortgages. Good in concept. There's been certainly a lot of corruption in the reverse mortgage world. That's my answer for that. And but the concept is kind of a neat idea, I think. Be careful of fees. Everybody's out to just read the paperwork carefully and investigate. I've never done a reverse mortgage, and I've never actually known anyone who has. It's not something our clients use. So just be careful, read the documents, understand the way the deal works, and go online and read some articles, watch some videos from other people that say, what to watch out for with a reverse mortgage. One of the wonderful things about the world today is that all of our fellow humans are out there writing about stuff and talking about stuff and making videos about stuff that help us. They're sharing their experience with us. So just check that out. I'm not, the expert on reverse mortgages. Okay. Would you recommend?
Hey guys, are we back?
I hope we're back over here.
Let's see what's going on over here.
There you go. Try again.
Yeah,
you got it.
I'll control this.
I'll talk to these people.
We're getting shenanigans.
So
gremlins from the
the gremlins are out. So CV asks, Jason, would you recommend investing in apartment buildings? I own several single families and want to diversify. Well, I was kind of answering that question a moment ago with Gene here. And, there are advantages and disadvantages to each. Just understand apartments are more like running a business.
Running into hotel gremlins.
Is it working? Good. I hope it's working. We're going to get back on here where we're doing the double live stream in a moment, folks. So the apartments are more like running a business, single family home. Even several of them is more like running a bunch of investments. And so that is one of the major differences. John says, mahalo, are you in Hawaii? That's great. Okay, let me see if I can find some other questions here for you.
I guess
you guys. Are you there? I think you're back.
We're getting there. I got one computer up. I'm gonna get the other one going here.
Oh, Ernie's so funny. Ernie says, hey, if it wasn't for Pfizer, we wouldn't have Viagra. That's hilarious. Quick Crypto is drinking Jack Daniels Tennessee Honey. Hey, welcome. Glad you're drinking with us. Is that
stiff drink?
That's a stiff drink? Okay. Okay.
Guess,
and R&R is drinking Hennessy. Cheers, R&R.
Okay, sorry.
Ernie's got a beer, it looks like.
Yes, you got that right, Kate. Yeah, you absolutely got that right.
We got a few more questions to do here, folks, and I've got half a beer to drink. Now, I have a question. Is it half full or half empty?
Good question.
tell us your answer.
All right, so we're on an Omni guest Wi-Fi here at the hotel.
Yeah, do the guest one.
Since the
All right.
is Hartman.
Oh, look, we got all kinds of people drinking. Okay,
Oh,
Mitch has
good.
got an oatmeal stout.
Turns out everybody
Awesome.
drinks every day.
And let me see. Hi, Ramona. And
I can
Quick
only
Crypto
imagine
is a half moon
debauchery that
man.
comes with the audio version of this, Jason.
Hey, next month we'll be back to normal on your channel. We'll be talking about normal stuff. Okay. Who do you get all this 30-year debt from? Oh, well, we've got several sources. I mean, is that Ramona? Are you outside of the U.S.? I
I'm trying to
mean,
get one computer going.
the 30-year investment grade debt is not difficult to get, and we have lots of referral sources for you. So just reach out to our investment counselors through jasonhartman.com. We'll be happy to help you. Okay. Jay Romano says, thanks. I buy small multifamilies, but local lenders only allow 5 properties until forced to do commercial loan. Yeah, that's the problem. You'll get better financing on the residential properties, no question about it. Oh, give me a break. You love this being on location and having surveys at the same time. You don't have to have both computers working. If you just got that one working, we'll go.
Point. All right.
Yeah. But is the sound coming through that one?
Yeah,
That's where the mic is.
This is
Okay, that's the master.
Right,
Okay,
so
good.
we're just gonna do a gorilla.
We got
here,
it.
Guys.
It's okay.
We apologize.
We got it.
And really, Jason's the important one here. So
Yeah, look, we'll do this. We'll put both computers over here.
we get twin pillows.
Okay, yep. All right. Here we are coming back on, people. These angles aren't wide enough on these things.
That's okay. That's okay.
Or we need a thinner table, a narrower
I'll just
table.
jump in here
something
like
that.
this.
Yeah. Okay, hi everybody. We're,
right,
we're
we made it.
back here. Let me just adjust this and I'll get us some better lighting here. All right. All right. Yeah, the screen light is a light. Yeah. Okay, good. Hey, everybody.
We made it. Sort of. So we got two streams going on. We got Jason's stream going on. We got the Rebel Capitalist Pro stream going on. The hotel is doing hotel stuff to us, and but I think we made it back, and we're going to continue with the questions as we were doing before the Gremlins got a hold of us.
All right.
And
So
this is in a
talk. What's your questions? You've got questions, right? Let's get those.
You know what George has been doing lately? He's been popping the green room URL into so guests can just jump in the green room.
Yeah,
and he'll add them, and then he'll have a question.
We've
It's pretty
done that
fun.
a few times. Yeah.
That's pretty good. We should do that. We should do that when we're actually prepared. Okay, cool. So all right. So do we knock this one out with Craig with respect to the multifamily versus single family?
Well, we were doing that as we got cut off.
We just kind of started
just,
pontificating.
I mean, look, basically business versus investment, one part of it. That's definitely one component.
There's
and the multifamily, you can force appreciation by adding value, adding a laundry room, adding vending machines. All this stuff can increase your cap rate and increase the value of your investment. On a single family, you're going to have an asset that most of the time appreciates better than a multifamily. The single family home appreciates the best mostly. But on a single family home, you can't force appreciation usually
as easy as you can
by
adding a bunch of washers and dryers to a multifamily or something.
You can, if you increase the income, then you get a multiplier on that income through the cap rate. But an advantage of a single family, kind of going back and forth here, is of course you have better financing, and you don't have this issue of the tenants ganging up on you, rent striking, stuff like that.
The decentralization aspect of it. So
it's decentralized.
Your
political risk is lower. Absolutely.
Right. You got to think about that stuff.
Yeah, no question about it.
For sure.
So there are advantages and disadvantages to each. The financing is more available on the single family than it is on the multifamily. Higher quality tenant on the single family than the multifamily. But if you have a lot of capital to deploy, easier to scale on the multifamily because you're going to do bigger deals at once, right?
Yeah. Good points. Good points. You do make a ton more money on the multifamily though if you can get into it. I mean, the people I know. That's like where
If
the
you
big bucks
scale
are.
them,
Yeah,
well, I mean, you can buy 10,000 single-family homes,
that's a
or you
lot.
can buy 100 apartment complexes and have 10,000 units that way,
Yeah,
right? Either
Yeah.
way.
it's a lot of money there. Okay, let's move on to the next one here. Let's see here. This is from Kate. Kate asks, Kate's in the chat. Thanks for hanging with us, Kate. Hi, Jason. Is now the time to buy real estate or stocks at inflated prices? If the individual can actually buy anything at all, competing with BlackRock and the pension funds, or is this the time to hold cash in spite of inflation to spend in the coming reversion to the mean? This
is a market timing question again.
Market timing.
Kate,
Yeah,
come
market
on,
timing.
don't do it.
Everybody gets into market timing.
Don't try to time the market like that.
Will there actually be a reversion to the mean, or is this a new normal? Question is, we don't know, but that's why we don't play this variable. Seriously, if real estate must crash, why is BlackRock buying it at 20% more than asking price? How does this inform us of what they expect the future to bring?
It's optimistic.
Is the assumption
They're
that
optimistic, yeah.
real estate will rise without limit forever because it will be held in the sweaty palms of the World Economic Forum, landlords of Mordor?
I love
It's so true, though.
the pros here, the sweaty palms. of
Everybody
World
gets it,
Economic
though.
Forum. This is
Everybody
great.
gets it.
Kate, you need to write a novel.
Or the prime objective is to ditch the currency quickly at any price because the snafu will be so completely devastating that 20% to 60% loss on real estate is the best alternative. And yet we know the GDP is dropping in a bad way, which tends toward recession. So while cash feels very risky, if we're truly approaching recession, then cash is king. But where to park it? George taught me that the MMF, banks, bonds, my mattress are all bad ideas. What are some good ideas? How do you see it falling out? Recession versus inflation versus stagflation, or all three? In what order? Also, any comments on real estate investment trusts versus physical real estate, especially for elderly people and others unable to be actively involved in management? Thank you, Kate.
Kate is the king or the queen of the compound question. There's a lot of questions there. Yeah, a lot of stuff.
We have a lot of Rebel Capitalist pros, and I love them for it because they love to stuff a lot of questions within the question.
It's good. They're really thinking stuff through.
That's the important thing. Is they're critical thinkers, man, and I think that's more important than anything else. So good job on that.
Absolutely.
Yeah.
So, gosh, I don't know. I think we're going to have to go back to the question to make sure I hit every one of those. But
yeah, we don't have to stare at ourselves. That's for sure.
I'll start with the REITs and the pooled investments versus direct investment. Of course, I'm in favor of direct investment by a long shot, by a huge margin, because I don't like relinquishing control to some Wall Street guy.
Yeah,
right,
who would want to do that?
Going to take advantage of you
Sure.
and skim all the profits off the top. As far as, what else? The World Economic Forum is in there. There's just a lot of stuff.
Where do you see this going next 10 years, Jason? Where do you think going? Like there's a tinfoil hat. Well, it's not really a tinfoil hat. It just seems like it would be with the nefarious World Economic Forum, the Great Reset agenda. You know that there is lots of pressure on basically the centralized planning.
Yeah.
And they're using what we would consider this pandemic as an excuse to enact that Great Reset agenda. Yep. It's quite clear that BlackRock could be used as an instrument to procure single-family homes if they so choose, because it looks like they can do that, and they are doing that.
Yep.
And if there is an infinite balance sheet on the Fed side, then BlackRock could technically go out and buy anything at any cost
because they're in bed with the Fed,
and they could literally undercut every landlord on the planet.
They could make everybody in the world a renter.
Yeah, they could undercut all the landlords because they don't have a balance sheet to work.
They can pay.
There's
more.
no P&L.
They can overpay.
Yeah, there's no P&L, so they could overpay, charge less rent, and undercut everybody, and then you're at the mercy.
But then when they gobble up the market share, they'll raise the rents way above where they were, which is what Uber basically has to do. For example, with the taxi cabs,
well,
right?
Do they have to
undercut all the taxis, and then they'll just raise the price once all the taxis are gone?
Sure.
Okay.
I guess the difference though is Uber is technically a private company, right? Well, it's
So is
publicly traded, but BlackRock serving as the procurement arm of the Federal Reserve and the United States government could technically just undercut everybody And due to modern monetary theory, UBI, et cetera, they can just basically, money isn't a problem to them. So if they truly wanted to enact a Great Reset agenda, you could see this angle as an approach.
It's one of many angles.
It's very scary.
It's just one of many angles. Yeah, no question.
Question is will they be able to enact it in enough time before I guess another party gets in and stops it, or
the pendulum swings.
That's
right?
the point.
Yeah,
because like you said, like we've all kind of know the hard times make hard leaders, tough leaders, and good times make really weak ones.
Yeah.
And we're experiencing that now,
Yeah.
but at some point, the piper needs to
be paid.
Needs to be paid, and we'll see the pendulum swing.
You're making me think we need to make a movie recommendation here.
What are we going to watch?
Everybody needs to watch one of the greatest movies of all time,
V is for Vendetta.
Fight Club.
Oh, Fight Club. Yeah, that's a good
Such a great movie.
That's such a good movie.
Do you know that the author of Fight Club sold the screenplay rights, the movie rights, for $10,000?
Oh, wow.
That is such a good movie. That's one of the best movies ever made.
Man.
It's incredible. There are so many deep messages in that movie.
Yeah,
It's amazing.
It's a good one.
It's not some barbaric bunch of guys fighting, but that's part of the Great Reset. It's part of the debt agenda, right?
Yeah.
That movie was really prescient in a way.
Sure.
It saw things that are playing out.
That are playing out right now.
Yeah. But what else do we have in Kate's question? There's so many compound things in there. Anything else we sort of need to cover?
Well, it says, is it time to buy?
It's time to buy in linear markets. It's time to be very cautious in cyclical markets and somewhat cautious in hybrid markets.
Yeah.
And just in case anybody's new to our stuff and doesn't know what we're talking about, 3 types of markets throughout the world: linear markets, cyclical markets, hybrid markets. Simple explanation.
Yeah.
The cyclical markets get all the attention. They're the markets that are the high-flying markets.
California, New York.
They're most of the west coast of the U.S., the expensive northeastern markets: New York, Boston, Washington, D.C., etc. Miami, near where I live. Around the world, they're Paris, London, Dubai. See, we had Dubai earlier, right?
That's a cyclical market.
Hong Kong, right? These are these high-flying trophy markets, right?
Yep.
And these markets are very risky, especially in pandemic times when people don't want to be so close to each other.
Right.
And there's so much civil unrest in these cities.
Dense urban areas.
Dense urban areas are bad.
Bad news. Yeah.
So I would avoid those. So those are the cyclical markets. They're overvalued. The linear markets, though, all the rest of the world, pretty much, the boring places that don't make the news.
Things you want to hear about.
Memphis, Indianapolis, a whole bunch of Florida markets that aren't Miami. Okay. Those markets are good. They make sense. The prices are not that high. We were going to talk this month about the Hartman comparison index.
Right.
So since we did our mobile thing, we'll do that next month on your channel.
Okay. Yeah.
And we'll really dive in to answering the compared to what question. And that question will tell you and really show people that real estate in these linear markets is actually quite cheap, historically speaking.
Yeah.
When you compare it to gold, cryptocurrency, rice, many other things, that will give the answer.
It'll give you at least a good perspective.
Yeah,
Yeah.
definitely.
That things aren't as bad as
And
they
we're
are.
also now comparing it to a commodities index called the GSCI, the Goldman Sachs Commodities Index. It has been around since 1970, and it profiles 24 commodities in the index. And when you compare linear markets to that index, they are cheap.
But
It's
everything
pretty
is
amazing.
rising with respect to the fiat dollar.
Yeah, but the fiat dollar is fake. It's fake news.
Yeah, but everybody uses the fiat dollar to transact. That's the problem.
Yeah, but it's just a name.
That's our
of
medium of
something.
exchange, so we use for everything. So, unless you have barrels of oil sitting in your backyard to buy a house with.
Oh, I forgot to mention oil. That's one of the most important ones. Thank you, Gene. I forgot oil.
Yeah. It's an interesting comparison, but really that's kind of what it is. It's just a comparison.
Right. Yep.
Okay, let's move on to the next one here. Or did we knock this out? I realize Kate's probably asking us some deep questions here, and we've been drinking, so
Sorry, Kate.
yeah.
But if you're drinking with us, you'll understand.
You'll get it. I guess the big
Because
moral
she'll
of the
think our
story
answers
is,
are profound. If she's
well, the
drinking
thing
with
is
us.
this like we're in a time right now where everything is at risk, right? Like there is no safe haven. All you can do is use probabilities and just think as far as you can out and just
Comparison.
hope for the best. You got to compare.
You got to
You
pick
know?
the least worst thing.
Yeah. There's no 60-40 risk
Yeah.
parity portfolio that you can just invest in and be okay for the next 20
There's
years.
just not. Yeah.
So you
So-
just got to do the best you can. Right now, it just seems like, there's some top performers, there's some serious underperformers.
We're in a crazy time.
It's a crazy time. That's really the bottom line. But yeah, still linear markets in safe states, red states like the Floridas,
And
the
that's where
Texas.
most of them are.
Yeah.
Like most of the linear markets are in rational places.
People haven't lost their minds yet.
Yeah, right.
That's really what it
In the
boils down
cyclical
to.
places, they've lost them.
And in fact, you can probably use that as an indicator where there's sanity.
Yeah.
It's like where are
You
the
can.
linear markets? You probably find the more sane people.
Mostly, it's not 100%, but mostly, yes.
Like, because
that correlates.
you're gonna find a lot of people just kind of gravitating towards the insane places, probably because there's too many incentives to really justify
Mhm. Yeah.
anything, right? Okay, let's move on. This is from Marshall. Marshall asked, "Hey Jason, I purchased a handful of SFRs over the past
Single-family residence.
single-family residence over the past year in a couple of the same markets that your group targets. For each of these properties, I put 20% down and financed the remainder with a 30-year fixed debt. At this point, my investment savings, which I use to fund these down payments, is largely depleted. And in order to purchase additional properties, my option is to either wait and save or access funds for another source, like cash reserve account, my 401k loan. I could sell stocks, I could sell crypto, my primary residence, equity, etc. Of these, my primary residence has pretty substantial equity, and I would like to be able to borrow a sizable amount via a cash out refi, which would move my rate from 2.865% to around 3.25%. This would add an additional $900 a month to my primary residence mortgage, and I believe I can net $1,200 to $1,500 a month to start by investing this borrowed cash into these same markets I'm currently in. Use these funds for my 20% down payment, then finance the rest with 30-year debt. Now, while the numbers do make sense, especially taking into account appreciation, principal pay down, inflation, and debt
Okay, so he
deduction
gets
taxes.
it. He definitely gets it.
Oh, he knows what he knows. He's a student of yours. I want to make sure I'm not taking on too much risk with this strategy. What do you think of this strategy? And are there any other factors you suggest I consider before making a decision? I'm 40 years old, by the way. If this is the factor. Thanks for all your guidance as I'm a frequent listener to your podcast.
Okay, well, thank you for listening to the podcast.
Heck yeah, Marshall.
And Marshall, I think you're on the right track. I mean, I think he gets it.
3.25% after refinancing and equity stripping.
So
is
the
still
rate
cheap.
the rate is going up, but it's still cheap. And Gene, one of the things I asked Robert Kiyosaki yesterday at our collective conference is if this was the first time historically that the official rate of inflation was higher than the 30-year mortgage rate.
I would say so. Oh, not the first time.
It's not the first time,
Yeah,
but
not
it's
the first
probably, it's the first time in Marshall's lifetime
Sure.
because he said he was 40.
Yeah.
So I know that. And in the 40s, apparently that was out of sync like it is today.
Okay.
Now,
That's what Lynn would say too. Right?
the real rate of inflation we know is much higher than the CPI, the Consumer
Absolutely.
Price Index.
Sure.
So but now literally the official rate is higher than the mortgage rate, which is
Yeah.
insane. It's
The
incredible.
government's taxing.
Yeah, can you imagine that? Oh, Max is coming back. He wants to give us another beer. If we have another beer, we could do this for another 2 hours, but we better not have another beer.
Yeah,
I
I'm
don't
okay.
know.
I'm okay. I can always Uber home. I'm
Yeah.
down the street, so it's
Yeah.
not a big deal.
Thank you, Max. We appreciate
Thanks,
it.
buddy.
Okay. So,
But what do you think, though?
what do I think about what? Which part?
Well, you think he's got
I think
a
his
good
rate
idea?
is going a little higher, which I don't like.
Yeah.
I don't love that because I like the lower rate. Of
I
course.
like the idea
But
of
Otherwise, I love it.
You think maybe he could equity strip, but keep the same amount? Keep the same monthly mortgage payment, yet have enough money to pull out of that. You could strip enough equity to make a down payment for another place, probably.
Mm-hmm.
Yeah, but that's the thing is you do have to compromise with that mortgage rate.
Yeah, I don't think that's much of a compromise. I mean,
It's not a lot.
the inflation rate is much higher,
$900 a month.
and the fact that you'll free up all that equity and be able to use it for something, I think you should do it.
There you go.
I wish you could duplicate the rate. You're going to pay a little more, but it's in the broad scheme of things, it's nothing.
Yeah.
So I think you should do it.
Yeah, you could put your money to work. and do better.
Yeah.
Okay, cool. Let's move on to the next one here. This one's from Linda. Linda asks, hey, Jason, what are your thoughts on buying real estate in the U.S. right now for cash flow? Resident in Florida, Texas, or Tennessee? Oh, residential in Florida, Texas, or Tennessee. Taking into account Biden trying to tax unrealized gains and changing write-offs for owning property. Is it too late for this with the recent Zillow mishap, or are we at the top? And is the world we are headed into drastically different than the world where this would have made sense? I currently have some mining stocks, resources account managed by Sprott, Bitcoin, physical gold, and silver. Do I need real estate as a hedge at this stage?
Well, I think you're going to do, Linda, I think you're going to do much better with real estate than you are with gold.
Well, she says I would need to cash out some Bitcoin to take a loan against the 403B down payment.
The Bitcoin, I don't know. I mean, that's so speculative. It's so up and down.
You know, I got to be honest with you, Jason, man. Honestly, it really, there's a probability in who's going to be managing your property.
Mm-hmm. Yep.
Because it all makes sense on paper until you actually have somebody managing your property and you realize what the true cost is.
Most of these managers suck. Dude. I mean, they absolutely suck. That's why we teach people self-manage their properties.
Yeah.
Okay. And I'm a big fan of self-management from a long distance. You can do it. We've taught people how to do it. I've done it. I did it by accident. I stumbled into it.
I think that's the.
You got to get rid of your managers. They just are. They're just skimming too much profit off the top in those cases.
Yeah.
So self-manage your properties from a distance. It can be done. We teach people how to do it. You want to learn more, go to empoweredinvestor.com, join our community. It's like RCP, your community.
Yeah.
And it's about the same price actually too. And we will help you self-manage your properties.
I think that's the big, that's the big elephant in the room.
It's the intermediary party risk. That's what it is.
Intermediary party risk. Yeah, you got to look at that because if you got to, I mean, I'm dealing with that right now. So you got to take that into consideration. Like it makes a ton of sense.
There are a small number of good property managers, but the operative word is small.
Small.
It's a small number. Yeah. But if you think about it, if you're investing in any pooled money asset, you're subject to the same kind of incompetence, graft, and corruption.
Yeah.
Okay, as you are. I mean, if it's Wall Street, you've got the investment managers.
There's counterparty risk for sure, but like if she has
you
to
just don't see it, you don't notice it.
If she has to take Bitcoin, if she has to sell her Bitcoin in order to, make the down payment or something of that nature, like personally, I'd be like, no, I don't think so. I mean, unless you really need to diversify your risk and you feel like you're not diversified enough and you're looking at this from a diversification play.
So you're a Bitcoin fan?
Oh, I'm a huge Bitcoin fan.
Yeah.
Hell yeah, I own a lot of Bitcoin. Well, I mean, relatively speaking, right? I mean,
but no multi-dimension or what?
Yeah. I'm earning a yield in Celsius right now.
Okay,
Yeah.
So what are you doing? You're loaning your Bitcoin out?
I'm loaning it out. I'm lending it on Celsius, and it's not bad. I mean, I'm not super rich with my Bitcoin, but it's like an extra $1,000 a week.
Yeah. But I mean, the value can just fluctuate so dramatically.
Oh, but that's okay. I mean, my cost basis is like between $5,000 and $6,000.
Oh well, you're
It's
like
all-
the person that got in for $8.
I know. I mean, everybody get into Bitcoin at the price they deserve to get into it at. I think that holds true.
We will see. I would love nothing more than to see Bitcoin
And
totally succeed.
I look at it like this. I'm like, okay, even if the United States decides to say you can't use Bitcoin, well, I'm leaving the United States.
Well,
because there's a big problem with
a coordinated effort with many
There's a big
other
problem
countries.
with the United States. Well, I'll move to El Salvador. And
here's the way the U.S. One of the many ways the U.S. pressures other governments. Okay.
Yeah.
As soon as there's a typhoon, a hurricane, whatever in
Oh,
El Salvador,
yeah. But
and there's a natural disaster, and they need the U.S.'s help, they say you need to expose all those crypto accounts.
Sure.
You need to tell us who's there. The only way you can escape that is to relinquish your American citizenship.
Well,
Because the IRS will tax you on all worldwide income, and they will also control you.
That's the thing with the U.S. is it's the only country on the planet that's going to tax you anyway if you're not living in the country.
I know.
Right? So, like, at some point, you got to ask yourself, do I want to be a part of a country that's going to tax you?
I don't know.
And
the U.S. is a pretty great country, all things considered.
In 2021, 2022, you're like, okay, but like 2032, 2033, I mean, if things continue down the route they're going.
Compared to what?
Compared to freedom. They
So
used to be.
tell me who's got more freedom that's like a major country with a high standard of living.
Again,
Give me one example.
You have to
please.
look at it.
Just one.
You have to look at the future probability of where we're heading and ask yourself,
Yeah, but
are we going down
all
that
those
path?
countries are going down the wrong
So,
path.
so do you want to have? You want
It's
to
a race to the bottom.
Do you want to be like living as a serf in the United States, as getting universal basic income as your way of like subsidizing your life, as opposed to like living free in a farmland in El Salvador
You
off
mean
of your Bitcoin
in El Salvador
that's worth millions of dollars?
in El
Because
Salvador, where there's a massive number of kidnappings
today,
and I
today,
don't know, man.
right? Money goes where it's treated best.
Yeah,
You got to think
sure.
about that.
I agree. I totally
Money
love
goes
that.
where it's treated best.
Yeah.
And Bitcoin.
I agree with that for sure, but I don't know. I don't see it. I think
And
the
you got
US
to ask
is
yourself,
way
like
ahead.
at some point it becomes a central bank problem, not so much a political problem. There's a lot of politicians that are moving into politics that are pro Bitcoin.
Well, listen, El Salvador has been on
El Salvador
Bitcoin
is
for
just-
like 5 months.
I know.
Okay,
right?
so let's see
It's
what
just one
happens.
example. It's just
Yeah.
one example, right?
Let's see what happens.
But my argument here is that at some point you got to draw the line and go, okay, is my country really serving me, or am I serving the country as a direct
It's
result
only a
of
question of comparative
tyranny?
Just show me better, and then I'll
Agree with you. I'll agree with you on that respect right now. But you got to draw your line in the sand at some point and go, okay.
I think it's a race to the bottom.
Like when they take all of your wealth, let's just say you have $1 million in Bitcoin wealth, and you're like, okay, this is the first time in my entire life I actually feel like I have something. And the government says, no, we're going to take it all from you. Like, where's your line in the sand?
I say I say that the U.S. is less likely to be able to get away with that than almost any other country.
And I agree with you. But at some point, if it does happen, you have to draw that line in the sand, right? Because that's the argument. The argument is like, well, you can't use
but
it.
it's only the line in the sand is only good. That metaphor is only good if there's someplace else to go.
Right. And my argument is as well, the moment that they take that away, there's going to be some country, it's a vacuum, right? The moment they take that away, there's going to be some country that says, well, come here.
Yeah,
We'll take
maybe.
care of you.
But
Right.
maybe seasteading will be the answer.
That could be. Isn't that Peter Thiel's thing?
Yeah, it's Peter Thiel and a lot of people.
Yeah.
My friend Patrick Friedman
I
is the
think we all
grandson
have-
of Milton Friedman.
I think we all have. I think.
is all behind seasteading.
Yeah, I think we all have that.
So
kind of fantasy.
seasteading, let me tell you what that is. I did a couple of shows on it. And basically that's the idea of creating sovereign countries that float at sea.
Yeah.
Okay.
Yeah. Remember they're off the coast of, what was
Yeah.
it, Thailand?
Whatever.
And they shut them down.
Yeah. These are all pipe dreams so far. So we'll see.
Yeah, the future. You just have to have plans.
Hey, as Yogi Berra said, the future ain't what it used to
I
be.
mean, I wouldn't live in this country. I wouldn't live in this country and be on government welfare because they took it all away. Let's put it that way. I'd rather live on.
You'll
my own
live
terms.
somewhere else and have no welfare at all.
Yeah, at least I can
And,
live.
and you'll have kidnappings and murders and, it's just.
Well, I have my Bitcoin, and
there's-
my Bitcoin is
yeah.
still a better currency than any of the fiat that's out there.
If it works anywhere.
It
of
works.
substance.
It works. It works today.
Next question.
Moving
This
on.
argument is not going anywhere.
Uh,
But I appreciate the fact that the beer is helping make the show possibly more interesting.
Yeah,
I don't
okay.
know, it might be really uninteresting. It's only interesting to the people drinking.
But it's
Let's see how many people we have listening. Oh, 72,000. Okay, we're good. We're
We're-
interesting enough. Hey, 72,000 people.
Okay.
Thank you for tuning in. I hope you've got a drink in your hand. Let me see your comments here. Okay, so I think you've got a lot of great comments here. Thanks for these folks. I'm sorry we can't address everyone.
Oh yeah, there's a lot of folks in here.
Um,
See, ask Andrew Henderson. Yeah, he's a nomad capitalist. He's pro Mexico too.
yeah, he doesn't understand the compared to what question very well.
I just think there's more than one question than compared to what though, because we're living in 2021, fourth turning. There's a lot of shit going on. So compared to like the last fourth turning,
I get it. By the way, folks,
we're down to one more
when you
question,
post
Jason.
when you post your questions and comments, they're going on multiple channels. There's a whole bunch of Facebook pages, YouTube, etc. So they're not like all in the same place. So it makes it a little hard. But Jason Kincaid says the Grand Canyon for what? Or Zeitgeist? Oh, those are movies. Yeah. Well, Zeitgeist is an interesting series. There's like 4 Zeitgeist documentary films.
Here,
Those
Kate
were
has another
interesting
question
watches
for you
years
right here,
ago, yeah.
Jason. She asked,
Hey, Kate.
actually, I can show this one. Does Jason's podcast include discussion of legal structures, asset protection?
Oh, absolutely.
I know, this
Okay,
is a
yeah,
layup
for
right
sure.
here.
Yeah, absolutely.
Yeah, you should definitely jump in there. In fact, I'm getting emails about asset protection right now, I think.
Oh, hey, let me give you a link for that. And I will give you that link right now, and it'll be helpful to you. You know, we've got a great asset protection attorney who's a real attorney,
Legit.
and he's inexpensive and great. You get real attorney consultation, not the typical BS that, you know, some of these houses get, these mills of, non-lawyers give out. Let me find that link. But go ahead.
All right, so the final question is probably a question I already know the answer to, but if you were to buy something outside the United States, what would you buy?
Oh my gosh, here we go again with this foreign stuff.
I know. Yeah, everybody's a little sketchy on the United States right
Compared to what? Where is it not sketchy?
Yeah.
Okay, the link is, can you put this in your thread by chance?
Yeah, sure.
It's just Jason. It's www.jasonhartman.com/protect.
Oh,
okay.
Well, that's easy.
And you can watch that free web class, jasonhartman.com/protect. And
Here you go,
the attorney will present the whole thing along with me. And there's some really good stuff there. You'll like it.
Oh my God, I hate doing all this, getting it all wrong. Okay, jasonhartman.com/protect.
Yeah, jasonhartman.com/protect.
Okay.
Yeah.
There we go. I got it in there.
Everybody likes our high-tech thing. You know, these laptops where the cameras are sitting on pillows. You notice how wobbly they are to wobble?
That's right. But they work.
Yeah, absolutely. Okay, so asset protection, having your entities properly structured and doing this stuff right, it's one of the things that is inexpensive and easy to do, but you must do it in advance.
That's a good idea.
You must do it in advance.
Now, do you recommend like every property you purchase, it should be under an LLC, or do you have like another scheme for getting that thing protected?
That's sort of difficult. Portfolio. Really think about what you're really protecting when it comes to like a property or a brokerage account or any other asset, a crypto account on an exchange, whatever, right?
Right.
What are you protecting? You're protecting the amount of equity, right? And remember, we've talked about equity stripping tonight. You brought that up with some of the questions.
Yep.
We do not believe in having a bunch of equity in the property. Whenever possible, strip it out.
Yeah.
Okay.
Yeah.
Like I'm refinancing 3 of my rentals right now as we speak.
It's kind of a leverage thing.
Yank the equity out.
Yeah.
And so if you don't have a lot of equity, you don't need to be terribly concerned about protecting because you only have a small amount of equity.
Mm-hmm.
If you have a large amount of equity, then be very concerned about protecting it, right? But think about it. If you have 20% equity in a property and there's a creditor who is after you, and by the time you have selling costs, and assuming that they can attach that property and force you to sell it, they're going to want their money quickly, so they're going to sell it maybe below market.
Yeah.
There's nothing there for them to get.
Right.
It's like a little bit of money. It's not worth the hassle. Okay. So you don't need to stress too much about the properties. And there's a big myth in the asset protection world because it's speech I've heard over and over, and I have to make the disclaimer. I'm not a lawyer. I'm not a tax advisor. Okay, so seek out appropriate advice from real professionals.
Right.
But I can tell you about my own experience and what I hear and what our clients say to me and so forth. Okay, this whole idea of the internal threat and the external threat. I do want to point out the concept of that here.
Yeah,
okay, so most of the people think that what you're worried about is your tenant.
Sure.
And your tenant slips and falls and sues you, and they take the property. That's the internal threat.
Okay.
I have not found that to be a significant threat at all.
Pretty rare.
Because number one, you have insurance.
Yeah.
You insure around that, and you're a responsible landlord. So if something's broken, you fix it. So they don't slip and fall easily, at least, right? Reasonably. And I've just never had a problem with like tenants suing me. And I've had, I don't know, maybe a couple thousand tenants by now over the years, right? But the external threat is the more critical threat.
Okay.
Where something happens outside of the asset whether it be a property or anything else,
All right.
and then they attach that asset.
Yeah.
Okay, so the example there would be you've got this house, right, a property, and you have a business,
Mhm.
and your business, which is complicated, property is not very complicated, business is complicated.
Okay.
It creates liability, and then that liability they try to take the property, okay, or another asset, a brokerage
That's
account,
where an LLC.
or a cryptocurrency on an
Yeah.
exchange or something like that. So if you put the entities in the right jurisdictions,
Mhm.
it can become very hard to do that. It can become very hard to get that entity.
Yeah.
And that's what, if you go to jasonhartman.com/protect and you just watch that little web class, for an hour, it'll
Yeah.
just teach you a lot. And then the attorney will make you a very inexpensive offer where, you can get 3 entities set up for you, a whole strategy, consultation with a real attorney. And it's great.
That's a good idea.
So do the
It's a
stuff.
really
You
good
got to do the stuff in advance.
Yeah.
Okay. It's the one thing you got to do in
Yeah.
advance of the
idea.
contract.
Now, I got one question for you. This is probably something you're not familiar with. Maybe it is, but let's just say you have property management and you're assuming they're doing their job.
Don't assume that.
But then all of a sudden you find out there's a lot of bills that have gone to collections and your credit's at risk because property management wasn't.
Wait. Why would they be in control of your bills?
Well, I'll give you an example of Pennsylvania, for example. I've
Uh-huh.
got homes in Pennsylvania, and there's some regulations in Pennsylvania that require a couple of bills that need to be under the homeowner's name, like the water, I think, the power, the trash, like the sewer bill, things like that, like
Yeah.
these fundamentals. And I'm running into this problem right now where I've
So
noticed.
be in control of those bills yourself and pay them yourself.
Well, that's
don't
one
rely
way.
on a manager.
Well,
to do
see,
that.
the property management, what they've suggested is like, well, yeah, it's in your name, but the bills get sent to us, and then they get paid by the tenant, right? So you're like, oh, okay, but then all of a sudden you're getting a call from the collections agency telling you, hey, you need to pay this water bill. This water bill hasn't
because
been paid
the
on this.
manager was supposed to pay it.
Yeah, it wasn't being properly taken care of.
Wow.
Right? And it just lapsed,
Yeah.
like to the point where collections is now
Yeah,
like
yeah, yeah.
harassing.
So what you'll have to do is check on that stuff regularly.
oh, I
Maybe
know,
you
I'm
put a
learning this
reminder in
now.
your
Yeah.
calendar, and every 3 months.
Now,
you
is
check
it
on that,
would that would
but
an
I
LLC
would,
protect
I
you, though?
recommend, yes, it would, and that's one of the great things because the LLC has a tax ID number. You never use your social security number,
Yeah.
Okay.
Okay.
and so
See, that's
it
one
cannot
way.
go against your credit. The LLC is a separate, like, natural person.
Yeah.
Okay,
Yeah.
and as long as you follow the formalities of it, it is separate.
Yeah.
What this all came from was in the days of the great explorers, Columbus, etc.
Right.
And a lot of them were Portuguese, right?
Yeah.
And nobody wanted to finance these ships that would go to who knows where and who knows if
Sure.
they would ever come back. And it was just too much risk.
Yeah.
So they invented the corporation so that you could say, look, I'll put, $10,000 in this exploration deal or whatever the
Mhm.
equivalent was back in the day before so much inflation.
Right. Yeah.
I'll
Gold
put 2
standard.
pence,
Yeah, gold
whatever it is, right? And that's all my liability is,
Mhm.
just what I put in. Everything stops there, and there's a wall, a brick wall,
Yeah.
where it stops and does not go to you personally. You could have a whole bunch of those deals and a whole bunch of other assets in other places, and they can only get what you put into the deal.
Okay.
That's what your risk is limited to that.
Yeah.
And so, yes, use entities for all of that.
I'm starting to see that. Like, there's
Yeah.
some areas like
Absolutely.
I'm starting to see what's like. You definitely want to protect yourself, even if you think you got things dialed in. There are just some things coming out of left field that you just need to protect yourself from. And I think an LLC makes a ton of sense, especially for certain states.
You've got to have multiple LLCs.
Yeah.
You want to create firewalls
There you go.
and separate your affairs.
There you go.
That's
Yeah.
what you do. And I'll tell you, I remember this one office lease we had. This landlord lied to us and did not disclose other deals that they were making that, I asked them about directly.
Yeah.
And I had that deal under a corporation, and it was just so low stress. It's like, here's the corporation. That's doing what it's doing.
Yeah.
And I'm living my life and doing what I'm doing.
Yeah. Yeah. Right.
And,
right.
I'm not happy about what that entity is going through.
Yeah.
But again, it stops.
Yeah.
It stops there. It's a firewall.
Yeah, that's a good point.
Yeah.
I think that's
And Robert Kiyosaki, actually, because we talked about him several times, he has a pretty famous story about that.
Oh, really?
Not one that he tells, but I read about it in the news years ago, where he had this deal, and he had a separate entity, and it saved him millions and millions of dollars on a deal that went bad. So you limit your exposure, and you separate things.
That's a huge one, man. Yeah, and I think that's a big takeaway before we close this one down. The big moral of the story is protect yourself, even if it's a single family home.
Yeah.
Especially if you're in a jurisdiction that's blue.
And you don't need to necessarily have the home itself in the entity, but you can have a management company that's the entity that contracts for things.
Oh, okay.
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 So in your example, you could have the potentially. Now, I'm not a lawyer, okay? So check this out. But I would think that you could have the home even in your name or the name of a land trust, which is much simpler than using an LLC. And it has limited advantages, not as good as a separate entity like a corporation or LLC. But you can do that potentially, and then you can have a management company that's your own management company.
Ooh.
That is the company that is a contracting company that contracts for things.
Okay.
Okay. Now that may or may not work. It depends on the jurisdiction. But when you learn how to use the stuff and use it properly and follow the formalities, it's pretty great.
There's a reason why this stuff exists.
Yeah, there is.
We've all plenty of people come before us have been burned. And it's been created for a reason.
No question about it.
Yeah.
So jasonhartman.com/protect. Check out that little class. It's great. A lot of our clients really loved it.
Knowledge is power. You're going to learn a lot just by, or at least you're going to be able to make a lot of progress by learning this stuff, and it's all free.
Before we go, let me see if we got any big burning questions we got to answer here.
I think that's it for us. We don't have any more questions on the pro side.
Hey, folks, if you asked a question, and we didn't get to it, or you have any other questions, just reach out to us through jasonhartman.com.
Yeah.
Also, get our free book at pandemicinvesting.com. It's totally free. You get it right away. It's a digital download, and it'll just give you some of our strategies adapted for the crazy pandemic times.
Never stop learning. That's the big moral of the story here. Is knowledge is what's going to get you through all of this.
That is true.
And that's why you guys are here. It's why I'm here, right? That's why I'm here.
And Gene, it's been great having a couple of beers with you.
Oh, I had so much fun tonight.
Yeah.
God, it's felt
this
like
is better than our normal lives.
Oh, this is so much better.
They may not think it's better, but I do.
No, right.
I hope you do.
We're gonna go back. I'm gonna go back and look at this thing and go like, what was I doing? Yeah.
Being goofy.
Sorry, guys, but not sorry at the same time. All right. With that being said, I'm gonna go ahead and shut down the Rebel Capitalist Pro side.
Right.
Jason probably can shut down his side.
I'll shut down my side too.
Thanks for hanging out with us, everybody that hung out. I'm gonna throw some shout outs to those of us in the pro side here. Kalui Boy,
let's see here.
Tony K, MC Oz, Kate, thank you getting ahead. Let's see, Linda, thank you for being in there. Masa, you guys, Andrea, thank you for swinging in and hanging out with us. Field, cool, you guys, so much. Thank you so much for hanging out with us tonight. Make sure you visit georgegammon.com/events to see where George and the team are right now.
And we got so much.
Right now, he's probably done like 5 live streams.
That's funny.
Hopefully I was going to go on the road with him, but I decided to back out. I just got so many loose ends.
Too much stuff to do. I get it.
Well, my whole thing is I just didn't want to get caught up.
Okay, stop. I got to say goodbye to my people. That's too much side talk. We'll talk about that.
See you guys later. We'll talk to you later. Have a good one.
Bye, everybody.
Bye.
Okay, and on my side, bye, everybody. Thanks for joining us tonight, and cheers to everybody. Appreciate you joining us. We love you. We appreciate you, and we'll talk to you next time. Take care.